Whew, good morning and welcome to a little windy this morning. There's a lot of snow out there. 3 days of snow we're expecting here. It was nice and there's hardly anything. Oh, my back is aching. Anyway, let's get started. Welcome to the Breakfast Club. I have to show him a new shirt. This is my Muppet shirt. My father-in-law went to Disneyland or Disney World. Brought me back a Muppet shirt. Muppet shirt is the theme shirt for the day. Whew, okay. Let's get started here. Let's make sure everybody's online. We're rolling. There we are. Brought me back a Muppet shirt. Muppet shirt is the theme shirt for the day. Right. Let's look for who's going to get first through the door this morning. Let's get started here. Let's make sure turn the light on. How beautiful that. That'll give me 10 years back. Right there. 10 years. There we are. Brought me back a Muppet shirt. Muppet shirt is shirt for the day. Right. Let's look for who's going to get first through the door this morning. Let's get started here. Let's make sure turn the light on. Make sure everybody knows. You can hear me. Testing 1 2. Everybody's good. You can hear me. Right there. 10 years. There we are. Brought me back a Muppet shirt. Muppet shirt is shirt for the day. It's really hot on my back. It's like it's that light snow. Okay. First through the door. There's quite a lot of it. Let's get started here. Let's make sure turn the light on. Make sure holy smokes. You can hear me. Testing 1 2. Everybody's good. You can hear me. Right there. It was crazy. 10 years. There we are. There's a lot of it out there. Oh, Furba. Look at Furba first through the door this morning. How's it going, Furba? Good to see you, man. Victor. There's quite a lot of it. Buenos dias. Louis from South Africa. Good morning. S. Wales. I don't know where you're from, my friend, but thanks for popping in. Christian, good morning. Oh, Furba. Look at Furba first through the door this morning. Let's make sure I've got my... How's it going, Furba? Good to see you, man. Victor. Buenos dias. Louis from South Africa. France. Good morning, France. S. Wales. I don't know where you're from. For you guys over there right now, I would imagine. Christian, good morning. I passed phase 1 yesterday after FOMC and waiting for my phase 2. Way to go, Furba. Stay positive, my friend. Stay positive. Buenos dias. Stay positive. I love to hear that. Good morning, France. I heard you twice. I don't know where you're from. For you guys over there right now, I would imagine. Close this one. Now, do you have an echo going on? I don't. I hope you don't have an echo going on now. Is it all good? We have no echo now, I hope. Heard you twice. Hearing you twice. Oh no. Stand by. You're good now? Now it's okay? Good. Well, good morning, everybody, and welcome to the Breakfast Club. My name's Darren Hancock, and we're here live in the charts of NASDAQ, and I'm going to try and blast through my morning ritual here of trying to rip through all the assets that I can see right now. It looks really good for the highs to get taken. We think the highs are going to get taken, but we're kind of stuck between this candle's low going lower. We've dropped below it, and then this candle's high going higher. So we're stuck between these two. Are we going up or down? It's easy to say, yes, we're going to go for that, but many times you'll see equal highs get formed and turn around and come right back into the range. So don't get your hopes up for taking the high, but if it does take it, then you're doing good. Right now it's just kind of waffling between those two decisions that I'm seeing in the super high premium range. Let's look at ES. That's a 1 minute. Let's move down to a daily chart there. I'll make new highs as well. That's awesome. They've taken out the highs from yesterday. They're making new highs now, so there's nothing. I've got no direction for you. There's no I can't see a new fancy price leg in here. No. So we're still pushing higher. I was kind of hoping we could get down into here. But the moment we break that high right there, that fair value gap, see, we broke it to the downside. You're like, this is good. Now, if we can hold that on the upside, we would, and we did, and then all of a sudden it just went down, snapped to the bottom of it, and then used it to close up. So as soon as it closes above, you think, nope, we're going long again now. So that was the big decision right there, the hinge, and we broke above it. We closed right on it and then opened. You're out of here? Okay, I love you, honey. Drive careful, please. Let me know when you get there. So we closed right on it. Then the next day we closed above it and you go, oops, I'm on the wrong side. Your fail safe, if you're a long trader and you were doing your days, here's where your fail safe would have only saved you a few pips. If you would have had your stop loss above here, your fail-safe would have opened, you would have come back down a little bit, and as it starts to come back, if it hits that open again, you close out your trade. That's how I would have closed out a fail-safe on a daily. So you would have taken a loss. If you would have gotten down here, you would have taken a much bigger loss. If you would have took it here, your loss would be here versus all the way back to your full stop. So it would have saved you some, but not all of it. So you go down to the lower time frames and see what we got here. So let's go to an hourly and see if there's something in an hourly that can kind of give you an indication of where we might be going. Let's turn this one to an hour. Now we've just got to break down, come back into this order block, mean threshold. It's holding right now. So we need this to start clearing out this one here. You're stuck between this candle and this candle on the hourly. If we take this candle's mean threshold out, look for further downside prices into this order block here. We've already hit the mean threshold, so it would be nice to see that get eaten through one more time and start getting into the rejection block. And if we can get below that, then obviously we'll start running back into some more. I'm not going to say here. We're going to run into this small little price imbalance here, and then obviously the BISI just below you. So there's lots of PDRAs that we have to hit long before that. But right now you're between these two. So you're in the premium portion of that little range. So look for either a retracement back into the discount area here. You have you got overlapping ones. So we got this one here. See how this down candle, we went above it here. We opened on it, and now we've continued higher. So this mean threshold, if that loses, then we're going to go higher. We still have more upside to do. So as you can see, you can almost argue both directions. So you wait until something manifests it's a little more cleaner for you. And Dow Jones has made a new high, so let's look at an hourly. Same situation. See, they've come back up into this candle here, close to the mean threshold, but hasn't hit it yet. And now we're closing back down into this candle down here. So those two candles again. Wait for something, a setup to happen. Yesterday we got a nice retracement off that rejection block, slammed all the way back down into this inversion here. Then we've opened, we gapped down, opened back up inside it to this order block. And we'll see if we get a reaction off of this now and continue back down. Yeah, we're inside this range here. Discount, premium. So mean threshold. Watch the mean threshold on that on the daily. Hourly, what do we got here? Back to the gap. Yeah, see that gap here? We ran above it, came back to the edge of it, and now we're continuing back to the upside. So look for rejection block, which we're hitting right now. Take out the highs, and then look for the mean threshold of this candle and the old low. Oh, we've already ran the old low here. Look for this next old lows up here. This consolidation. So highs, consequent encroachment of the SIBI, and then these old lows here. You may even get into this, yeah, could be a full fill of that. Breakers right here. So a little more upside for American dollar today into here, and if we get a snap off of that, look for a retracement, then your forex pairs are going to start to come back down again. So right now look for a little more upside or downside in your forex pairs. Upside in dollar, getting back in this consolidation, look for a run back down into, oh, see, this is going to fill here, and see what kind of reaction you get off that for the hourly. And we'll see how the 9:30 open, what happens at the 9:30 open. We have a breaker right here, a run down below this low. Doesn't take out this low here, but we do have a swing point here. So this breaker, we're just coming into it now. So we have a 2-minute breaker. Draw that out across and see how well it holds price. If it holds price, that's good. We're anticipating the dollar just to come up into that mean threshold here. And if it kicks off of that and comes back down again, then we're expecting the same kind of thing here. Kick off this breaker and start to retrace back higher. We're already off the mean threshold of this candle. We're back inside the daily fair value gap again, right in the middle. So up or down, take your pick. You're between this candle here and this candle here on the daily. So if the American dollar does push down and you do return back into this consolidation right here, the old high inversion, looks like we're hitting the inversion here right now, and we're kicked off of that, which is good. We also have this breaker, so I'll make that a little bit bigger so you guys can see it. See that breaker, last up close candle before run below these lows. This breaker here, draw it out. That's where you're finding some resistance. We pop back up into this order block. Now you come back down. Now you're stuck between this breaker and this order block. You're either going to come back and fill in some more of this inversion here, back to an old high. So look for these key points here, here, and here. Bodies or old high and a fill. So there's multiple PD rates we could hit on the way down. So you want to see this. If it does come down a bit, come back and revisit the fair value gap low, or this the swing point low here, this breaker, and then we're looking for further upside if the dollar does what we're hoping it will do. Canadian dollar ran out the highs, pulled back all the way into the range again yesterday. Look for a run back up into this order block, daily fair value gap, and we're stuck between this guy here and this guy here right now. We have run the rejection block on both sides now. Run that one, run this one. And now we're pretty much stuck in between. Yeah. This one's going to work. Yeah, we're inside this range here right now, fair value gap. You're banging around between these two daily fair value gaps again now. So what I'd like to see is a reaction off of this, and then start pulling back into the range for the day, and then Friday start to come back down for these equal lows. New Zealand dollar dipped deep into the breaker again. Yesterday reacted off of that, pulled us back into that daily fair value gap, and now we're back into the middle of the order block. You want to get back into this daily fair value gap, get up on top of it. So you're again stuck between a breaker, a senior array, and another fair value gap above you. And this breaker, you've run below it now, so that big candle there is a breaker above these old highs. Inside an inversion. Yeah, it feels more heavy. And then if the American dollar finally lets go and we get some lift off of this, look for a run back up through this fair value gap here, fill that up, get on top of here and start pushing higher. It's all hinging on where that American dollar goes after this mean threshold here. Aussie dollar, a little stronger. Look at the difference between the two. This one's given up the ghost. The Australian dollar is the stronger of the two pairs. Just came back to the fair value gap below us here. And we've had a nice reaction off of that. We've gone through the main threshold with a wick into the rejection block. Back, now we're into daily fair value gap. So you want to see this climb up and get on top of it. If it comes back down below, look for a revisit of this order block here, or look for a revisit of this order block here, and then a reaction off of that. So we're stuck between this order block here and getting through that one on a close. Weekly objective, look at that, we're running right up to that those weekly highs. We're finally going to take those out. That means the US dollar has to push up just a little harder, otherwise we're into rejection. And if we pull back into the range, another good example why rejection blocks, even on a weekly basis, are great places to take some profits if they're available to you. So we're waiting on this one for a weekly. Let me go back into daily. We've run the highs back to the order block. Look at that inversion right here. Come back, get some nice balance off of that. I have a nice snap back. That's really nice. So if we push the American dollar one more time, we may end up just clearing out these highs and then pulling back into the range. Wednesday could make the high of the week. Thursday's reversal. We make it continue back down again. You're kind of waffling between taking the highs out, which looks more likely in this case. You're definitely bullish until proven otherwise on the daily. Hourly, we have a reversal. Come back into the look right here. We break structure to the downside with a bold candle, come back inside the fair value gap, revisit it one more time, and right now we are, if we get above this candle again, right here, then I'd say we're bullish again. Right now you're in the middle between this range, so you're 50-50. Crude oil. We have 1 minute, run above highs, creates our fair value gap. Here's our swing point. Drop down below, come back into it. So and we've taken out the lows here, so your first objectives have been hit already. We could get a run all the way back up into here. This whole section is layered buys, stop losses sitting above. Looking for continuation on the downside. Now that you've taken out all this liquidity down here, this could be a good place for reversal. So if we get a body that trades above this and comes back to it, then you're stuck between this one's reversal higher and this one's reversal lower. And they're really close. So again, you sit on the sidelines and wait for something more cleaner to set up. Maybe just a wait and see day today. Gold has kicked off that little fair value gap we were talking about yesterday. Look at that. Came back, hit it nicely, and now we've reacted off and going higher. So that was our little pivot point that we talked about, and it held, and we continued to the upside, taking out rejection block and the old high. $2,200 for gold right now. Fair value gap, we broke through that yesterday. See, we're coming back, finding support at it. So if we see this starting to lift off of here now, start looking for, well, we hit the rejection block. Look for 50%. If we close above 50% of this wick, then we're looking for higher prices in silver. Copper. We're looking for downside. We're looking for copper to go down now. We have a body that trades below this spot here. If you just treat this as a pure reversal type of setup, this could drop prices down into old highs here. So I'm looking for prices to run these lows out today. If we close above this on the day, then we're going higher. Otherwise, I see downside prices on copper for today. And old highs have been hit that we're calling for in palladium. Those old highs were hit yesterday. Perfect. Review yesterday's start, and this is where we're looking for it to get back to, and it did hit nicely. We're reacting off of that now. You're stuck between here and this old high here, fair value gap. You want to see that get above this and then start driving prices higher. This is your linchpin right here. Now that we've called this old high, we're getting a reaction off that. Look for that fair value gap now to give way. You need to get on top of it in order to go higher though. And I think we have wheat. Yesterday we were calling for wheat to go lower. And did we get this? This was yesterday, 20th, 21st, 20th. Run these lows, old highs, get a reaction, order block, break above, support, breaker, hit the breaker's main threshold. So now we're stuck between this range here still. And now that we've made a little swing point, we need to either get on top of this swing here or mean threshold of that order block to go higher. I don't know why I'm just going just with wheat, because it's the first one in my little pile, I guess. I've got too many cottons here. I have to start adding some extra. So if there's a commodity you want me to kind of look at, I'll add it. I've got 3 cotton spots I can, or 2 cotton spots I can trade for a different commodity if you're interested. Anything fun in here to look for? Got a nice reaction off of this higher, so look for coffee to get up into this breaker up here, 190. Yeah, 190. I like that one up there. 93. 93.13 for cotton. Your sideways and soybeans. Okay, that's it. Let's get over to our NASDAQ again. Look at that. That's just running those highs out now. See how that little, you're running from here to, you got this one reversing down, you got this one reversing up. Body's traded above it, they come back inside it. Right back to the stop loss here. And then continuation to take out the highs. So, still remaining bullish. But other than that, let's say hello to everybody this morning. Holy, we've had lots of people. Ferba, good morning, Victor. Wales from France. Hello, I heard you twice. Better, better, better. Thank you. Hi. Iggy Pip. I like that. Iggy Pip. New York Open. Here we go. Kitty, good morning. Can you come back to Dow, who is dancing in Trinidad? take phone calls during the show, man. Can you come back on the Dow? Who is dancing in Trinidad? Who's dancing in Trinidad? I'm not sure I understand what you're saying, but okay. Sup, homie? Lobo del Cash. Good morning. Gyang. Good morning. Good morning, friends. Wishing everyone the best. Thank you, Ebom. Maurice. Good morning, my friend. Sorry we get to leave so abruptly yesterday during our conversation. I was kind of enjoying that retail versus ICT discussion we were having yesterday. I hope you were you felt welcome and you didn't feel like people were attacking you, because I don't want that at all. I want to fully respect everybody's opinion about how they trade. Tristan, good morning. Dave, Barry, good morning. One trade for all. Thomas, Harry, Fernando. I love saying that name, Fernando. Maurice, a market analysis at 1 hour, 1 day. I like it. Good morning. Niv Trader, greetings all. On your chart of the Dow Jones, there is writing. They are dancing in Trinidad. On my chart. In Dow? They are dancing in the streets. Oh, that's because my buddy. That's just an old, I gotta remove that. They're dancing in the streets of Trinidad because my buddy Laurie got himself a funded account the other day, and we celebrated it, and I forgot to remove the words. So that's where that comes from. Dancing in the streets of Trinidad, my friends. Good eye, though. I didn't even notice that when I was going through that. Awesome. On green, but you are colorblind. That's why I didn't see it. Good morning, Rain. Good morning. Yes. All right. So is this the reversal everybody's been waiting for? Or are we going to take one more little run up and clean that high out? Or are we just making those? What is that high on the day? The high is 691.25 and the high is 695. So we actually did take out that high. So now we have relative equal highs. Is this the new swing point? This snap back down? Are we looking for a drive back down now and getting back into this fair value gap below us? Does this just turn, this candle turn into a big wick today and start to come back down into the range? Only the shadow knows. So some might say time of day, there's a little fair value gap traded below it, through it, stop loss goes here. You start to make profits, slam yourself into break even now because you don't know whether or not that's going to come ripping back through. If you're short, if you're waiting for this to clear on the downside, come back inside, put your stop or your entries in here, and if it runs through, you want to close it out before it runs your highs. That's if you're treating that as your swing point. There's your some body getting down there. There's a nice little swing that's occurred in Bitcoin too, if you're into Bitcoin. I don't know if I have Bitcoin. Let me put Bitcoin up here. Bitcoin, US dollar. Index, that's what I want. See this here, swing above, body trades below it here, trade back up inside it, slam, slam. Reversal, here's another reversal example here. We swept all these lows here. We create a fair value gap here, trade back into it, long here, and you're aiming for all your PDRAs, using your fib tool if you want, or aim for your old highs. Wait for the reversal to happen. Here's your reversal, swinging above an old high. You drop down below it, you come back inside it, you aim for your first rejection block, you got it here, you come back in for a second revisit. Right here, stop loss goes above. Body does not close above your fair value gap, so you run back in again, you take out these lows. You have a reversal pattern here, trade it above it, come back inside, you're running back up. Here's another reversal. We've run above these old highs, so you get this reversal pattern. Body trades below it right here, trade back up inside it right there. You're aiming for inside your range, use your fib tool, reversal. You've got this one here. We've swept that low. You run above it, but you clear out the high. So do you take this now? If it's already cleared out your high? No, you wait. And then you get the reversal on the other side. And then the return. So there's just a quick example. That's what I wanted to kind of show you yesterday, Maurice, about looking for specific turns. And that had nothing to do with RSI indicators. Not that your RSI stuff is not working. I want you to be able to see that if you have something that makes your RSI indicator work, or you understand your RSI indicator, I hope when I show you these things at reverse points, that when your RSI indicator indicates to you about a certain range, that you can zero in on that range and find more specificity and say, when my RSI consistently hits this spot and I'm seeing this pattern form, it's time for me to get into a trade. Okay, so if that helps your RSI indicators or your MACD or anything like that, all these indicators that retail are into, I don't want to take you away from something that you've been using for years and you obviously believe in. But if we can give you something at this point that helps those indicators give you a range that tightens up, that you can see it consistently amongst all your indicators, that's the point where I start going long now, then great. This will give you some precision, but it'll also give you something that's very clean that you can see. Here's your indicator. Here's a swing point below the low. We've taken all those highs out already, so it's not a favorable one. You have a reversal pattern that happens in here. You get in short. You trade between this one and the one that hasn't been tapped on yet. So as it comes back down, you'll see it runs back into it. That's how you manage between the two if you're sitting in a range, or you pull your fib tool. There's several different ways you can manage it. See how the rejection block comes again? Pay yourself at rejection, people, because the low did not get taken. And look at your profits getting eaten up here. I tell you, rejection block's the way to go. My buddy Lambo and Derek, they're converts. They see the value of the rejection block. Look at this. Just when you think that sucker's on the way down, it says, no way, man. So when you get a body close above it, you go, oof, and you got to wait for this to come back down. If it gets you out of your trade right there, it doesn't. So if it opens here, start trading back down. If it comes back into here, you close it out and take your loss from there to there instead of all the way up top. That's your fail-safe. Fail-safe saves you before that high gets taken. So you lost half of your 1% if you put your one. That's why you wait. You put your stop way up here. Oh, sorry, your entry way up there. If you go here in a huge stop loss like this, when you're close to running out highs, make sure you're going to say, well, I want my stop loss really tight, 1% right there. If I trade above it and it closes above, and if the moment it opens, if it trades back down again and starts to come back up through the open, you close it out. Usually, remember we say when that fair value gap becomes an inversion right there, then it usually trades back to it. If you want to wait till it comes back to it, or gamble on it coming up and taking you out like right there, then you go, okay, I didn't get it. I did take a full loss. So this failsafe would have saved you from there to there. That's approximately half of your 1% that you've risked on that because you wanted to get short. So now we're taking out higher highs even more. Harry, good morning. Fernando, good morning. Maurice, Marquinhos, it's good. Green, all morning, good. Morning, D and Team Theta. 1 for 1 point opening gap range. Bitcoin, it's on a rocket. Rejection blocks 1,000%. Consolidation. Those of you who are into your CAM models, you're chomping at the bit for your return to your CAM 1 model. You may even have a CAM 2 model there. Stand by. People who are perfecting their CAM models, look at how close you were to getting CAM 2. You definitely got a CAM 1 though. You already hit your first objective. If that's all you do is just CAM models and you wait for your entries, you're 50%. If it trades below 50% on a close, you're out before your stop loss. It's nice. Nice CAM model entry there. First thing this morning, how's that? We haven't even hit 10 o'clock yet and you're already in profits. You CAM people. Thomas, I'm so scared to trade because I don't know how high it's going to go. Then you've got your answer, my friend. You've got your answer. Until you get yourself a really clean reversal. Now you've taken out these highs cleanly. You want to see something. I'd wait for 10 o'clock now. And once you get a break in structure to the downside with a big bold candle, we start ripping through this with a big bold candle, creates a fair value gap, you can get back into a breaker, a 2022 model reversal. Wait for that kind of stuff because that's pretty much what you're going to have to look for in order to get out of here. But you also have to support the idea that if we're remaining bullish and this just turns into this monstrous candle that keeps rushing up, support it. You don't want to be marrying a trade on the way down. You want to start looking for continuation on the upside. Order block here, mean threshold. So you're between this candle here and this candle here. Look for your premium and discount arrays. Pull your fib tool. 50, let's get our retracement. So we're inside this candle. You want to see this either pull back into this candle here, that one and that one, get back over 50% of that range, which is back into that order block, mean threshold, fill, into the wick. You want the body, which is right at 50% at least. There you go. So now start pushing through to the higher. It's okay if it just hits that now, rolls over and goes, because that's hit the order block. So if we roll over here now, look for this one to get taken out. We're already hit the mean threshold once already. if we push up higher for a fill of the fair value gap, look for the mean threshold to fill, to hold. And if you continue to push through this, on a close on the 1 minute, look for higher rejection block and higher yet. That reversal on Bitcoin, man, it'd be paying you huge dollars right now. I've managed to get that account to 94%. And I'm not doing trading every day, but I still have another week to go to get that over the 100%. So we'll run up into that order block now. Look at the mean threshold. Somewhere about in here, so we should be able to fill that. Now you've got this order block here valid, so now we're inside these two. See how they're overlapping almost? Well, they are overlapping. So the algo is going to go here and say, I've got to bounce off this. I've come back up into here, so I've got to bounce off the mean threshold here, get back to the mean threshold here. Or I've got to rip through this and start pushing, extending the range. I've come back into that order block, leave that last piece open and start really pushing down for lower prices here. Rejection block. See, we already came back through the candle once. We've came back through the top and the open. We ripped through it all again into the mean threshold, and we've come back to it again, and now there's just not much of it left to get eaten through. So we've moved into an optimum trade entry, so look for your OTs or your optimum trade entry this way. Sorry, let me just put it up in the right direction. 62%, bang, on the money. And now we're driving back down. Rejection block again. You are denied your low. Come back into the range. Order block, 2 minute order block. We want to try and get back up into, if this holds now, you've got, now I think this wants to extend. We want to extend this down some more. You can model people. That's why you paid yourself, move to break even, pay yourself here. It's coming back now and taking out your lows. Move to the sidelines. Beautiful cam model entry today. That's beautiful. So now we are extending down. I just didn't see it. This coming back when it's here, I didn't look at this and go, there's nothing really in here that supports upper candles and lower candles, so it has to extend down for a new range. We've swept the lows now. Now we've got a midpoint. We've got a premium candle and a discount candle if we can get above here. Look at the range we're in now. Naturally, you'd like to see this continue down now that it's taken out those highs. If that starts ripping through that, I can dump this one. Yep. So we have a break-in structure now to the downside. We've got underneath the consolidation. So if you wait now and come back into, we did trade below it here. We big rip through it though. Oh, it's back into this breaker, sorry. I was looking for a little breaker in here, but it's this guy right here. We body breaks below it, we come back inside it here. We come back to it again here. You want to see that kick off of there now and start coming back down. So that's an entry for, that's what we were talking about. But I would like to have seen this become, is like a reprice rebalance. So this would be like a fair value gap in here. Reprice rebalance. This is usually a good indication for our bearishness. So we've just come back into the breaker right here. Run up above these old highs. We broke down below it, break in structure. We come back inside it, reprice, rebalance, come back up inside one more time, tap it. Now I'm looking for this to start coming back down. If we do start digging back up into this range, the only premium I can see is this guy here and that breaker there. So it'd be like breaker, breaker, overlap. And then if we start getting in above this, then I'm going bullish again. So I still want to be bearish. I'm bearish right now. Because I'm on the 1 minute chart, I reserve the right to change my mind as soon as I break that candle right there. Otherwise, we're bearish. And this is where you can see a lot of conflict with higher time frame thinking people. They go, you can't keep changing your mind like that. I say, yeah, I can, because if there's going to be a change in the market, you're going to see it on a 1 minute chart. You'll actually see it on the 1 second chart if you're studying that before we see it on the 1 minute chart. If you believe in algorithmic theory, that is. So you can see if this was a 1, 2, 3 minute breaker that ran up above these highs here, you're well within the range of coming back inside this right here. Let's have a look at this. 50%. Sorry. If we just come back to 50% for a premium to go discount, that would fill the fair value gap here. I just don't want to see it climb above that. So that would be the linchpin for me for higher prices or lower prices. What else we got here? I was just scared to say thank you, Thomas. Okay, news at 45. Probably a decline. Equities, probably a decline. Interesting. Equities. See, there's a probability versus right now there is a decline. We've broken structure to the downside, so this is telling me we're bearish. So again, if you're bearish inside a 1 minute chart, aim for your premium and discount arrays, aim for your short grabs. Believe me, these little pops above here, like that cam 1 model you had right here, just from there to there, if you're looking at how many handles you take, if you just took off the top there is a cam 1, that's a 662. To that high is 6.9, so that's 32 handles. I don't know about you folks, but put 1% on and get 62 handles out of it for your day. Move to the sidelines. Your trading day is done until you get something more delicious and nutritious, like a nice little breaker. Return to a breaker and more downside. Aim for here. Just that breaker from there to the low here is 59, 39, it's another 20 handles. So now you're up to 80 handles with 2 different models. That's the consolidation cam model. That's the breaker, reverse to the breaker. Once you break market structure to the downside, which we talked about over here, look for this breaker to find support at. I was looking for something in here and blatantly missed this one that was very obvious right there. And I find some people don't believe in the validity of that unless I take the trade. Like, you'll see people say, well, why didn't you take the trade? Well, I'm not going to take every single one of them. And if I could, I certainly would if I had the confidence to take them. It's not what I'm pointing out is wrong. It's whether or not you have the confidence to take it, whether or not you want to take that 1%, whether that's your study and you studied that enough to know as soon as that breaker goes, I'm jumping in on, and I'm sure there's some of you out there that saw that breaker as soon as it broke market structure and you came back to it, you piled on it like a everybody piled on the donkey, went for a ride. There's a lot of people just wait for that setup to happen. Break-in structure, look for a breaker, return to it, get it, put your stop loss just above this high. If you take out the low you're looking for, move to break even and wait. So now it's a zero stress trade. Oh man, should have been in that Bitcoin trade. That sucker's really, it's come down almost $1,000 just from that point. That swing point we're talking about. Come back up inside right there. Boom, there's $1,000 from that 67.6 to 66.6. $1,000. That's a ton of money if you're in that. And that's the swing point, right? Just above the old high. You wait for this kind of setup to happen. You break through it. You have 1, 2, 3 entries. Stop loss goes just above the high, 1%. And the moment it breaks that low, slam it right to break even and let her buck. So you're zero stress trade. Take a piece off as soon as it takes that low. Pay yourself at rejection blocks, my friends. You're clipping coupons right now, boy. At all these lows, you're just clipping coupons, and you're moving your stop loss to the one before. Once you take this one out or this one out, you move to the one behind you. That one, move to that one behind you. So if it comes back and takes you out, you've had a delicious day. You move to the sidelines. You make a pina colada. Take your wife out to dinner. Take her on a vacation. Go help out a homeless person. You know, do something nice for some people. Anyway, let's get back over here. So we're still looking for downside prices. Stoic Jack. I love Stoic Jack. Oh, where's the carrot? Don't forget the carrot. Here you go, Stoic Jack. Stoic Jack. Tap. You get 1, 2 attempts at it. Have we run the lows? Are you paying yourself at rejection blocks? Fair value gap fill. Rejection block. You don't get the low. Not yet. So reprice, rebalance. If we get up on top of this, come back to it, I'm going bullish in the short term for a run back up into this here, back into this range. That's a discount array to a premium array. If this becomes a swing point and we get an order block, find some support at it, we have a consolidation model. If we get it back up on top of that, this could be a second level distribution. $10 o'clock. Wait for a setup. Wait for your silver bullet now. You can see why Michael said he gets a lot of people might get a miffed at saying, why you keep you shouldn't be scaling out your profits. Like, pick a spot, go for it. If you're on a higher time frame, absolutely. If you're trading on this time frame, look for these PD arrays and pay yourself. Come on down to the carrot. Bitcoin's just, I'm going to keep harping on it. Bitcoin. I've got Bitcoin on another screen here going, oh, that was a nice trade this morning. Richelieu, good morning. It's not for me, it's for the algo, says Jack. Jack goes, look, I don't mind. It's not for me. I don't eat carrots, but we know we must feed the algo. You're right, Jack. We must feed the algo. Richelieu, hello. More drop statement, or yeah, it makes. Right now, we're obviously retail will look at this as a bear flag. We can get a bear flag fail, come back into a range. Look at the range you're in right now, or an extreme discount. So if we get up on top of this thing right now, it becomes like we get a bold candle shoot above, come back, find some support. You have a Cam 1 model for a premium, so look for this candle here, and then look for this old high and breaker. Yeah, I guess it's a swing point. If you look at its own candle makes its own low, I would say no. Not a really strong one anyway. But anyway, it comes back into here. So I'm looking for that area right there and this candle right here. If we start getting up on top of this, this tells me we're going bullish inside this range. And if we continue to climb up on top of these little inversions, I remain bullish again. Until if we take that out, then I'm really bullish, because now you've got a premium array that is a fair value gap that breaks. Now it becomes inversion on a premium level, then you're looking for more highs. And those who had a reversal pattern took the reversal. I guess you wouldn't have taken it because you didn't see it here. No. See a little imbalance in here, but I want something cleaner than that. Yeah, don't try to really squeeze out your trade. If it's not clean, like our, sorry to say, but our Bitcoin trade, that's very clean. You get back inside it, the body breaks below it, you trade back inside it, like super clean. Now, here's a good example. If you say, look, Darren, this one took a swing low out here, and we have the reversal pattern happening that you keep talking about, right? The first one's here. We blew right through it. So you say, great, now if it returns to that, I'm going to go long. And here's another one. Do you take the first one or do you take the second one? What about the third one? Do you take the third one? You're between this group, which is going lower, and this group, which is going higher. So if you said, I'm going to take this one, as soon as it comes back to it, I'm going to take it and get out. Put my stop loss way up here. Do you want, oh sorry, your stop loss would be way down here if you're going to go long, right? So it trades above, comes back to you, takes you in, trades back up. You're looking for your first rejection block, and it comes back to your order block and then blasts right through you. And you go, oops, am I ever on the wrong side of that? Now this becomes another inversion, not a swing point above an old high or all, but you would get your stop taken on the next run down. So that would be a full stop loss there. Versus this one, you trade above it, swing point, trade above, come back inside, start cleaning out your rejection blocks and old highs. Wait for the next reversal, start cleaning out, come back into your range. Don't forget your range and use your fib tool to scale you out. I think that fib tool idea is kind of a neat one. More downside. This is where you get this high resistance liquidity run. You don't want to be mashing around inside this. If you caught this right here, either the breaker, when you have a break in market structure to the downside, you get your breaker. Where would your stop loss be? Are you sitting above here right now? Do you move it down? Do you leave it where it is? Are you a longer term trader? Are you scalping? You pulling it tight? So you're going to say, I'm just going to go above my consolidation now, because this becomes the consolidation rule. So if I break below it, come back, I can do a cam 1, cam 2. My stop loss would be here anyway. So if I'm going to use this model now to become, or this model to become the support of this model, that one is a break-even trade right now. Actually, you're in profit, but if you see it break above 50% of this consolidation, then you close that one out and you wait. If it comes back and revisit it, get back in, start your trade over again with some extra money in your pocket. And you can't really say 50% of the consolidation yet, because it's still consolidating. But I think you got a pretty good idea what that consolidation is going to look like. Is my voice, it's a kind of, let me turn this up a bit. You're probably going to get blasted in the ears right now. How's that? Is that better if I'm here now? I just turned up my volume a bit more. Let me know if that's better for you guys. Joselle, no, you haven't really missed much. There was one setup right here this morning for a short off of a break-in market structure. Now we're consolidating, so we're waiting for something to happen here. If you're here, you're aiming for your first set of payouts, which are just below the lows, and any fair value gaps that you want to get, old lows. You always want to pay yourself at these lows, so you would have got some money here. And if you're a CAM model enter, you got some CAM model entries on a high. You've got a reversal to a bunch of lows for some quick profitability. Back inside the breaker now. Look at that. We're sitting right on the... You break that high there. Actually, I guess it would be right here. You break the high, you're going higher. Look for the range again. This is that consolidation or your bear flag failure that we're talking about. You can get a run back into the order block. Look for the mean threshold or the equilibrium of this range. See that right there? Boom. Perfection. So now you want to see, this is like a silver bullet. They call the silver bullet happening here for a long. We've traded above this, so you go bullish while you're inside here. You've hit the 50%. So we'll wait and see if we get a CAM Model 1 entry here. And see how we've come all the way back inside the breaker, right to the very top of it. So that still supports a downward run. This is usually the manipulation, and then the distribution goes straight down through it. So this is where you're kind of waffling between your breaker, reprice, rebalance, getting on top of it, coming back for a cam model 1 entry. What's your overall bias? Well, you've got equal highs above you. You'd like to see it retrace back into a range. You're hemming and hawing. What do you take? If you lose 50% of this on a cam 2 model, you close it out. Your stop losses is down here. Now for your next entry, if you're doing your cam 1 entry here long now, you pay yourself at rejection block, so that's very small, and you're risking a lot just for a little piece here. And if you say, well, there's a fair value gap there, I'll wait for that full fill. That'll get us almost 50% of that cam 2 model. And if I trade below that this one closes out on the downside with a body candle and it comes back to it, you can get out with a break even. Your fail safe should work here, provided it doesn't take a run straight down and take you out here. This could be your cam 3 model right here. If we blow below this, come back up inside for continuation. Those of you who are the cam model people, have your safeguard sitting right in here. Stop loss here. That's your safeguard. What's 50% of that range right there? Right here. So if you close below 50% of that, get out. You should be paying yourself right there at the first one. And move that out of the way. There you go. There's your first rejection block for a small, quick little entry. Now move yourself to break even. Zero stress trade now. If it comes back against you, you can enter in again and wait for the next one, because now you got a consolidation, and you still don't know whether that's going higher. And we're right off the 50% of the range that you're in. It's probably best just to sit on the sidelines with all this consolidation. But if you're really trying to get laser, I want to just nibble every little piece I can out of the market, which is, you're dancing with danger when you're doing that. Wait for this entry right there. Good. Now, if that's, let's say that's an entry right there. So we'll watch this now to see if we have a body trade below it. So that's a silver bullet entry for a long. Your fail safe is if a body trades below it, comes back into it. No reason why it should be doing this now. This looks like a potential cam 3. So wait and see what this does. If it takes you right out, it takes your full stop loss, it takes your full stop loss. There's the rejection block once again. Wait to see where it closes. How many people are panicking here? How many people are getting your feelings? What are you thinking about? Journal that. If you've entered in here and it's doing this candle down here, what's it doing to you? What's it doing to your mind? How much do you trust your cam model entry here? Two, one, bang. Right on it. So for me, I'd move my stop loss right there right now, because it should not revisit that rejection block. We should start leaving. Order block. You're in a small range now. Order block, breaker, revisit. If that just taps it right now, kicks off of that and starts coming back down. Are you paying yourself here? Are you going to wait for up here? Are you going to wait for this? Or are you just going to shoot for the stars right now? my stop loss would be snugged in tight. And I wouldn't want to see that revisit, so I'd probably just bring it right up to break even. And if it comes back and tags me, I wait for a better entry. You're in a consolidation here. It's really sloppy and messy. But there's a nice Cam 2 entry right there. I think Cam 2 was even down further for a model, was it not? Yeah, 50% was just below that right there. Did you pay yourself at the mean threshold? Order block. So I'd be like, snug that sucker right up tight right now. Pay yourself a little bit right there. Move to a zero stress. You put a couple of bucks in your pocket. Wait. You're in a consolidation, man. You just nibbled a piece out. Good for you. If you like those kind of adrenaline rushes, other people will look at that and say, you're nuts. But some people love that kind of adrenaline rush. They like to be in that. They like to feel the rush of the candles. These are like bullets. They're firing bullets at you, my friend. And you're dodging and weaving the matrix. You're back to the order block. Consolidation again. See how it's just like high resistance. You got to trade right inside that range. So did you pay yourself at that point? Because it's just come back, and for me it would have taken me out right there. So you made a couple of bucks, break even, move to the sidelines and say, that was just dancing with danger. Ideally you want your cam model, and you'll see many times that Cam 2 will just take off and you'll be like, haha, laughing, running for these old highs here. Cam 1s do the same thing. When you're in a consolidation tight down at a discount range like this, you would expect it to get back up there. So now you can go back in that money you made there and that you broke even. You could go back in and try and get it again. Wait for the, put your stop loss down here and start your trade all over again. You still haven't taken out the highs that you were expecting to get. Same model. Now you've traded below it. Get out right there. Body's traded below it, so we're looking for further continuation on the downside. Right there. See that? And this only changes into a bullishness again when we break that high right there. On the upside with a bold candle, come back and tap it. Otherwise we're bearish now. And I'll draw this out here so you can see it. I can almost hear people saying it. You can't just keep calling it back and forth like that. You just keep watching it on a 1 minute and you'll see, oh, that's an hourly, it's not an hourly. Off the breaker again. And then once it breaks this low, I want to share something with you here. Okay, so watch this now. This is where you go, you're in a consolidation, you go bullish, bearish, bullish, bearish. If that breaks that high with a bold candle, you go bullish again. That's why your idea, when you're watching a 1 minute, you're seeing the market switch, 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 and you're going to be on the ball. But you can see when the market now has gone long, right there. So now you're looking for this high here. Helps to take your lid off your water. That's why you say you reserve the right to change your mind when you see the market switching it up. And when you're in consolidations, that's why you get beat up in consolidations. High resistance. You'll see it bouncing around. You'll say, I'm going bullish, I'm going bearish. I'm going bullish, I'm bearish. Well, here's why. You look for support above, come back, drive higher. You look below, come back, find support, go lower. Those are the ones that make you start switching stuff up. But you called the change in direction right there. Right off that turn right there. And now we're going higher. Look at the range you're in right here now. Look at the order block. You're in the mean or the equilibrium of this range now. So that was right at 50%. Here's your fill of your fair value gap right here. And we're back into this order block above us. It is a breaker because it's a swing point here. Up close candle before you take out this low and that low. We're into that breaker. If we give way on the mean threshold, look for further premium prices, which is this larger candle up top here. So watch this guy right there. Do we close above this point? So the microphone's okay. Sorry, I did see how my mind just drifts off to something else. It is helpful. I had mine turned up a bit to compensate now. Can turn it back down a little. Thanks, D. Okay. Somebody was complaining the other day about can you hear the fan in the background? Is the fan, I wanted to turn it down, on the sensitivity down on my mic so you don't have it. So I can turn my sensitivity back up so you guys don't have your volumes cranked. Would this be better? Ah! Here, how's that? I'm trying to go a happy medium here. Blow all your speakers. Yes, that's good. Breaker 5 minute filled. After 10 minute, make me think lower. Yeah, no, they're not lower yet. We just broke that consolidation to the upside, came back, found support. We're back up into our premium array now. So you're stuck. Are we taking that high out further? Right? You're inside this range. And just when we want to go lower, the breaker, find support, pay yourself some money right there. You make sure you pay yourself there off that breaker idea. If you didn't, you're now underwater and about to get your stop taken because you didn't pay yourself. Pay the trader. Pay the trader. Those who are into Cam 1 models, your stop loss is down here. You didn't lose your 50% of your range here. Let's pull your fib tool again, 50% of your range. 50% of your range is right here. You tap it right there. There's a Cam 2 entry, and old highs. So Cam model people, Cam model 1s, got a piece off there. Cam model 2s, you got under a little squeeze here. Your silver bullet people got a bit of a squeeze, and then you ran above your highs. You got your Cam 1 and 2 people, and your Bitcoin, and your silver bullet people you're still in. If you're using your failsafe, you would have taken out right there. You traded below, come back up inside, you get out. If you're using your failsafe. Some people say, hell no, my Bitcoin here, or Bitcoin, my silver bullet stop loss, I'll let my stop loss go because it's 1% of my account, right? From there, and there, whatever you want to do, whatever one you want to take, you scale out a piece here and look at 62%, pull your fib tool, use that to scale you out on the way up, back into order block we mentioned, back into that fair value gap we mentioned, and now back, find some support at this breaker, reclaim that order block, hold high, continue to the upside. Again, you got this order block right here. Are we leaving this open now? And we're starting to have a breakaway gap for running for higher prices. So we have another range. We have this candle here and this candle here. That's the small range you're in right now. Don't worry about anything else. Focus on this range right here. Premium array, discount array, equilibrium array, right? So if I pull the fib tool, let me get this guy out of here now. Let's get this guy out of here. Premium, equilibrium, discount. Let me just put that in as a, see that? That one's your premium, that one's premium, discount, discount. So you want to see this come back into here at least. If it doesn't, that just tells you that it's more bullish. If we end up blowing through the midpoint of this candle, it's more bullish. We're looking for a further run up into the rest of this fair value gap here in this mean threshold. It's the bottom of the hour. This would be great to see how we've come back into that order block. I want to see this one. If we're all going bearish, we all want to see this go bearish. You want to see this one give up. You're going to start breaking market structure again to the downside, because now we're going back to the upside and we're inside this range. So once again, we're stuck. You wait, and we turn our carrot and we stick our carrot sideways because we're not sure. Right now I'm bullish because I'm inside this range and I'm near a premium. So we don't get bearish now until I see this candle here break on the downside. Then I'm a little more bearish. Until we break this, then I'm definitely bearish. If we break the low with a big bold candle, not just a wick. So this is that whole thing about, do we find support at the premium array, get on top of it, and continue to the upside? Or do we drop down into the discount array, get below it, find support at it, and continue down? Or do we just go from a premium to a discount, giving you some discount prices, and then bang it's in here, getting smaller and smaller and compressing until it finally has to bust out somewhere, which is what is most likely to happen right now. So if we see this rip down into the discount rate, so here's your 50%. Strong would be pop off this and go. And if not, then we're looking for a run back down into here. Looking for discount prices so we can go higher. Then you look for the next price leg up. Unless we start getting really deep into the discount, then forget the whole idea of the price leg. Just look for the compression. We're below now, we're in the discount range. Look for these 2-minute order blocks here, and this one here, and then the fill of that whole fair value gap. Makes you think lower on the 5-minute. Let's have a look at the 5-minute. 5-minute. Imbalance right here. Return to the imbalance. Yep. Good one, Derek. Good call. So we went on to a premium array. blew all the way through the discount array. See that, how that second one, that breaker right here, we just ripped right through it. That's what I would love to see. This would be great for it to come all the way back down. Break market, not a wick. I want to see a whole body get through your break market structure to the downside. So now we've broke through this. Now you're bearish. And if you're going long on that, which you shouldn't be, because this is your run above your old high. There's your break in market structure right there. If you can get back into this with a wick, or sorry, back into there, that's the short that we're looking for, the infamous short that we're looking for above old highs. And that's the short, but you didn't get it here. You did get this one. I'm starting to see this. If there's two of these in the row and you don't get the first one, the second one, like if a body runs all the way through 1, 2, go for the second one, not the first one. Just kind of an idea I'm sitting on right now. So we'll have to look at this one continuing. I have to go back through the markets and look for all the swing points where there was double fair value gaps. And if it runs through with one candle through both of them, you take the second one. If it runs through the first one, you take the first one. See, this is not a delicious break-in structure. I like to see it get right here below the lows. We have a fair value gap. Here's your breaker. Same thing we had right here. Rinse and repeat. We now have a body break below it. Come back up inside it right there. Tippy-tappy. And away you go. So exactly the same setup here for those who are into the breaker idea. You're short right at that point there. And you're running for the first low. Take a piece off here. If you're super, you don't want to you really want to protect your stuff in this kind of wackadoodle environment. As soon as it takes that low out, you move it right into break even. Otherwise, your stop loss is above here. That would have to be above here, I would imagine. This could come all the way up into these two. I'd like to see just the mean threshold or consequent encroachment of this SIBI here get hit, leave that open, and continue on the downside. Or just retap the bottom of it into the body. 18,643. Then we'll go with the carrot on the low. I'll put it right here. Tip: Nasdaq is working as a safe haven in world equities. What does that do? Okay, so it's a safe haven for world equities. That's a big, broad statement. And does that mean that your focus should be on Nasdaq when you say it's a safe haven for world equities? Like, it's a broad statement. I'm trying to make sense of it for how do we utilize it? Does that make me go, okay, so that's a macro view? Does that say that's a safe place where a lot more volume, a lot more focus is? We're in the right place? Is that what you mean by that statement, Maurice? Nasdaq, take all U.S. strong move. Take all U.S. strong move. Yes, yes, the fan is noisy. Do you want me to turn that down again? Yeah, I can see that fan's noisy in the background. Sorry, you just have to put up with a certain amount of fan noise in the background, otherwise you'd be cranking your volume up inside your thing there just to hear me, which isn't going to make it any easier for you. The fan's like right there. It's pretty close to my speaker. And there's nowhere else for me to put my computer. It's sitting right up against the wall. I can't put it on the floor. It's not my, I've got a whole bunch of stuff underneath my computer here, so I apologize for that. Lots of yummy sell-side liquidity below 600. Another awesome example of, yes, of the rejection block into the 1 hour fair value gap again. 1 minute, so hard to trade. Yeah, we're in a very tight consolidation. So we just got, sorry, we got that return to what I was looking for right there, 60.43. So now I want to see this just kind of roll over and come back down. If we come back in, if we lose the mean threshold of the breaker, I'd be a little disappointed in that. So I wouldn't want it to get any higher than this right there. It's really choppy. Coming back into that range again. So here's your little tiny piece of fair value gap right here. Look at the 50% of the range right here. Breakers high is right there. 2 minute breakers here. 1 minute's here. So we'll see what happens here. So I want to see a big body. Remember saying I want to see a body get through this, not just this wicky crap. Because then you pull back into a range. When you get wicks, they're just run on stops. Then you come back into the range again, and it just makes that whole idea seek and destroy. Expand up, come back down. You run from the engineered liquidity above, and then you run for the engineered liquidity below. Then you come back into that range again. If this holds here now, and we roll over and start getting back below this rejection block, look for the next price leg down. What's down here? The rejection block on the daily. Coming back to the top of the rejection block. So watch right here for the next price leg. Now we've got this validated order block here. That's a good sign. Mean thresholds holding on the bodies. Don't worry about the wicks. Wicks do the damage, remember. Keep coming. I want to see a big body get down into here now. You need some carrot. Wicks, wicks, wicks. Nothing but wicks. These small little bodies, even on a minute by minute basis, they get really challenging when you get small bodies and wicks that are making the play. So breaker is still holding price right here, like this one did here. You want to see it run below the lows, and the moment it starts to run below some rejection blocks, take yourself some money. And again, you shouldn't even be wasting time, because in order to take this kind of thing, you have to risk your stop loss. That's going to be above here. That's greater than any profits you would have made. So do you want to risk more to get less? Or do you just say, look, man, when I get in these things, I want to go long. My stop loss is sitting up here for this one, and I'm still in. Yeah, I got squeezed, but I'm still in. I'm just going to let this thing run. And here I'm loading on again. That's your 2022 model. I'm going to keep loading on because I believe we're going back into here. And again, that's your level of conviction for your trade setup. It's entirely up to you. But I can see if you're still in that, I can see why you're still in that. Nothing's been, your stop hasn't been taken. And you're like old school, just drop a stop loss and who gives a crap, just let it run. If it takes you out, it takes you out. You don't have this fail-safe thing. See those wicks just dipping down? They're wanting to go lower, but being held back. They're just not letting the price get down there yet. Maurice, if we had if we have bad conditions in the world, NASDAQ will lose the least because the capital will shift from S&P to NASDAQ. If we have a good conditions, no recession, S&P will grow more. Ooh, that's interesting. That's good to know. So, do you consider this economy a good economy right now, Maurice? Is that why the S&P is continuing to climb the way it is? Or is it just all boats rise in high tides situation? There's your low taken. Take some profits. Are you moving to break even? I don't know. $526, man, we just jumped up to 500 a day or so ago, and now we're up to 526. That's craziness. We're doing. Thank you all for popping in. Wow, we're getting. Yesterday we had a milestone we hit. We had 104 people in here at one time. Never had that. Never had 3 digits worth of people in the house at the same time. So that's awesome. We're hitting milestones for the group and for the community, which I think is awesome. People are sharing ideas on the Telegram channel. I love that. People are helping each other out, and people are helping each other out here. Maurice, I appreciate your input from a fundamental perspective and how that kind of helps us to direct our focus towards some of the best markets to look for these kind of setups in. Dave Barry into the 1 hour fair value gap again. Let's look at the 1 hour fair value gap. Yeah, we're dipping into that again. See how if you want to go, we don't really have a swing low here though. There's nothing to swing below, so we do have a run above into the fair value gap. Tap it, come back up. So now you're really saying we've got this candle here. We've ripped that through it like it came down, validated it. We ripped through it here, and we've come back to the fair value gap here. So you're literally off of this candle here, that fair value gap, that inversion, and the old highs, the swing point. There's one of those stay the hell out of the markets until something golden delicious. Do you see how this becomes the setup on the hourly? This is not the setup for a long because we haven't swept an old low. But you see how this is becoming the setup right here for the low? If we get a big bold candle go ripping through this now, close below that, and then the next hour we trade back up into this in 3 spots with a stop loss of 1% way up there, we have a reversal, that reversal pattern that we're looking for. But we need a big bold candle getting down here, not like little tiny consolidation ones that just barely get through it. You want to see something distinctive, like a news event or something that injects some volatility or something to drop that right back down below there. But anyway, there's your setup forming on the hourly. Keep an eye on it and watch. This is where you get to say, look, man, I get an idea. I see this setup happening on the hourly now. If I get it, as soon as that starts to happen below here, I'm looking on my 1 minute chart to get in right here. So as soon as it comes back up into that, this area, or this area to go short, you look for your silver or you look for your swing pattern to happen at that point right there to go short, because now you've got a bias to continue on the downside. And if it trades above it on an hour, or you see trade above your entry level and your swing point, you're out before your hour even gets taken. It's using, you have a macro entry, micro entry, and a micromanagement of a macro entry. If that makes any sense to you guys. If we have bad conditions in the world, as there no recession 500. If we have good conditions overall in big general move in equities, depending on interest rates, earnings, US dollar, 5 biggest companies inside the index. It's all about where there is more profit, stocks, bonds, currencies in a normal environment. Stocks are up, bonds and currencies go down. Yes, they do. Yes, they do. So that's a lot of general stuff. That's a lot of hunting to find out where all the majority of these assets and equities and money is moving into the market, right? And then picking a market. And once you're in the market, well, you go. When you're in environments like this, you see daily charts climbing all the time, and you're down here on a 1 minute chart trading it, you really can't go wrong, right? We have a swing point here. We have a reprice rebalance right here. Come back inside. Body trades above. Come back inside. Going long. Aiming for here. That's a reprice rebalance. So you treat that like a fair value gap. That's the swing point. Body gets above it. Come back inside it. Aiming for liquidity. Short little snappy liquidity. Back into a range. Aiming for above the 50%. Looking for a run back up into that little fair value gap above you here. If you get support on top of this, you want to keep that. You don't want to lose 50% of this. So in other words, if you broke that high now and you were in right here, I would move that sucker straight up behind here. Put you a little bit in profit, because you take a piece off here, make a little bit of profit, and wait. If that comes back against you, wait for another setup. Doesn't matter. And right now you're catching some lift. And if I start to see these big gaps, I would start moving my candles up behind it, because when you get the reversal back down into inversion again, it'll come back down. You want to see it provide support off of that and continue to the upside. But you're looking for right here now in the premium range. See, we just broke past the equilibrium. Look for that premium range now to get a piece off there. Like right there. Boom. Take another piece off either the top of that. You may go, I just want a piece there. And if it takes that, I let the rest buck, and I move my stop loss right up behind this now. Everything's in profit. Just let it run now and run for order block above you. The macro is beginning now, or in the next minute, your macro will begin. So this could be the rollover and come back down, or we could get a real good push up now. You're in the premium array, so do you want to buy a premium to go short? Like sell it up high and buy it back at a lower price? Or are you going to buy long and you're already in a premium? You don't want that. You want to wait for it to come back into a discount before you start pushing for higher prices. You're inside the range, so are you going higher or lower? It's up to you. I'd wait because I'm in a premium right now and you're in this consolidation. Nowhere to go. But at least we're seeing this reversal. And you pull your fib tool and you trade your fib tool all the way up. So 50%, 62%, 70%, scale it out on the way up as well. You can use that method. You know what I'm saying? Like if I go here and go, we'll see, you get to see a bit of the idea of what this, this would look like from there to there. So here you enter in here, there's your reprice rebalance. You come back up inside it, tap it here, and you scale out a portion here, a portion here, a portion here, and one more up there. Now,
a way you can trail at your stop loss so that you don't lose everything now. You take out a portion there, but your stop loss moves to the one behind it. So if you go to 50%, you move to break even. If you go to 62%, you move to 50. If you go to 70%, you move to 62. If you go to 75, you move to 70. And if it comes back against you, the rest of whatever you had left in your trade is here, and you're laughing now because you're like, I maxed out on all my exits, and it came back. It would have taken me out, just came back to this old high. And if it rips through there now, who cares? You just made some money. Move to the sidelines. You're in the minute chart, man. This stuff happens all the time. Don't get all upset about missing, about what you're lacking. Look about what you just made. And if you're holding for that high and it's coming back and squeezing you and you've lost profits, if it rolls back on you now and comes back down because it's went to a optimum trade entry for a reversal down, then you'll go, I missed that opportunity to pay myself all the way up there. And again, that may not be your trade style, right? This is like super sniping, inside consolidations. It works, but you got to be disciplined to do it. I can point it out to you, but you got to be disciplined to do it. Follow it. And that's a reprice rebalance. It's more of an advanced level candle observation. Most people would probably miss that, but that's okay. That's okay, because if we're also doing what I've explained to you already once today or twice today, if we're trading from a reversal to a reversal, see how that body breaks down below that reversal, and what do? We trade reversal, enter here, to reversal, enter there, exit there. So you're trading for the distance between that one and that one. There's your exit. Now we're coming back down, old highs. You want to see this eat through here and start looking for higher prices if this is going to continuation on the upside. We just got support off this order block, an old cam model, you cam model people again, cam model 1 for an old high. So hopefully you can see all of these different types of setups that we're giving you here. And Bitcoin, I have to show you this one on Bitcoin. That one I just showed you, what we just talked about, reprice, rebalance, it comes back here, rebalances, shoots back up, right there, clears the top, dips down, gets you in for a continuation on the upside. Reversal, you don't get a chance to get in, and a continuation on the downside. So you go breaker, there's your breaker, run above an old high, watch, run, 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 run. We run down below it, breaking market structure to the downside. So if you miss this entry, you wait for the breaker to clear out, you come back inside the breaker, and you continue down to the next breaker, breaker to breaker. That's those, and we just talked about these types of setups this morning, that breaker entry and the reversal entry and the cam models. You've had multiple different points of entry here, so hopefully you guys can you see that, you get some value out of it. Cam model 1, run for order block. Don't forget, if we're in consolidations, pay yourself quickly, move to break even. Or you just say, look, man, I don't like that kind of adrenaline rush. That's way too much sniping for me. It's too stressful for me. Great, then don't trade it. That's not your style. And remember, right here, you're in a premium of a premium range, because you're inside this range right here. So you're premium of a premium. So if you're looking at 25%, 50%, 75%, of that range, you're in the premium portion of the 25%. And if you don't know what I'm talking about, study some ICT principles and you'll see what we mean by these quarters. and it's not quarters theory. It's just, see how they're 25%? So you're in half of that range. So you're in the premium of the premium range. That's your premium. That's your discount. This is the premium of your premium. This is the discount of your premium. This is the discount of the discount, the premium of the discount, equilibrium. And everything's fractal, man. Just trade between, if there's order blocks that support inside the premium of the premium, then you got to trade those until they burn out, and then they start moving in a higher direction or lower direction. So there's your return to order block. I was liking the high, didn't take the high, so order block. You have 1, 2, 3 pre arrays before you aim for the high. Those who had a cam model entry here, that's all you got to get out. Now you're broke even. If you didn't take it there, then you're just back to break even and didn't cost you anything. Zero stress trade. So stay zero stress. Get into zero stress trade mode as quick as you can. There's so many at this level on the 1 minute chart. If you can protect your principal, then you're just nibbling little pieces out. And Kevin, we'll keep referring to Kevin. He popped in once or twice, and then we haven't seen him this year yet. But that's how he nibbled his way to a funded account. Not doing this, he just did the silver bullet. 10 handles, moved to the sidelines, came back the next day, waited for the next setup. And he was disciplined enough to do that. Where's S&P on the run? Ooh, look at that. So economy is good, according to Maurice, what you're saying, right? If this is taken off, means the economy is good, and we're still moving up. People are piling in. Markets are great. Yam's making a whole new high. Dow. I call it Yam, but it's Dow. So we have a break above. See this? Look here. Body breaks above, and we literally open on. See, the body breaks up here, and then we gap down and right to the opening here, and then off to the market we go, running for the highs. So your swing trade on the hourly works just literally deliciously for your entry there. It might even be a fraction too high though. Yeah, it might be a fraction too high. If you're looking to get back into this spot right here, you may have just missed it. You might find it on a lower time frame. So let's just say that was the entry. So that's what we were talking about before. About let's do this. Let's do this. So you see this here. We see this swing. Oh yeah, no, it's not a swing because we were talking about swing points. But if this was it, let's look here on the 1 hour to see if we can find something that would say, all right, now we've run above here. We'll look 1, 2, 3 hours ago to see if there was something that could have got us going in for a long here on a 1 minute chart. 3 hours ago. 11, 10, 9, and 8. Around 8 o'clock. Consolidation. Run up. Well, your cam people are just saying, I saw it right here. Consolidation. Return to consolidation. Continue to the upside. Okay, 11 o'clock. We're looking for a return back into 50 to 70, 62% of the range now. That's messy. That's messy on a 1 minute. swings, reverse, inside, stop, looking for this mean threshold to give way, order block, support. We're between these two right now. Mean threshold has to hold to go lower. If it gives way, we find support at this. Looking for more upside. In this range, looking for here. Fair value gap here. Pop above that. Order block, you want this to give way now. Find some support inside here. Optimum trade entry. Good. Rejection block. Close above this. I'll open this up so you can see it a little clearer. Look right here. We have a valid order block. We have a rejection. Sorry, a inversion. You want to see it get through here now. If it comes back, find some support off of this. I like to see that stay open. If it doesn't, then oh well. But look at that snappy reaction off that. I love it. Drive through, hit here, order block. It's not a breaker yet. Wait till you see where that closes. If we close above it, you're still bullish. Hold on, you're richly on it. This is where you flip-flop back and forth. Bullish, bearish, bullish, bearish. Good. Okay, so as we eat through this one here now, watch the close. Got 30 seconds left. Rejection block, rejection block. You may not get the low. I guess you have. That's good. Mean threshold's gone. That's a mitigation block, not a breaker. So not a super strong candle right now, but it's a mitigation. We could come back off, mitigate off this and come back down lower. We have a breaker here. You want to see this get eaten right up and just blast right through it. We need some big bold candles now to get through this stuff. Like here, remember we were talking about this one? We want to see that rip through here. We want to see something with intent now. This is the retracement back into the open to 10 o'clock or 11 o'clock high or low. Back in that range, you try to retrace back 50 to 62%. Mitigation. We have wicked below it. I prefer bodies getting below these, not wicks, because then they're just wick runs. And you get back into a range. You just ran out these lows back into this order block breaker right here. Breakers are more stronger than mitigation blocks. But this is the breaker here to breaker here. That's where you're in between right now. Now we've ran this guy out. That's good. Remove him. Come on, we need a big ripper. So that's one you want to see it rip through here now. Give us some carrot. It's like a baby today. A little finicky, doesn't want to eat. Smooth edge, yes. Let's just see all these multiple attempts to get down here. Just lots of wicks and just keep getting rejected off back into the range. I keep getting punched off that bottom of that range back into it. But I want to see something just give me a big tear right here. Otherwise, we're still sitting in between this candle and that candle. And you see me want to go back to Bitcoin all the time, but I make my point. Here's the swing above the high. Body breaks down below it. Doop. Come back, tap it. And you just cleaned out another, what's that, 700? All the way down into here. It's like $700. $700 stock drop. Bitcoin, they say Bitcoin's just, you don't want to trade Bitcoin. You don't want to play in Bitcoin. BS, man. Bitcoin's an awesome thing to play in right now. If you know what you're looking for, you can catch some dandy little runs on it. But you got to know what you look for, and you got to be disciplined to take it out at levels that support you, not just keep going for these Hail Mary runs all the time. Just take your little bit of profit, these swing points, you take your trade entry long, and look for your premium arrays and start taking out at your premium arrays, trailing your stop loss up behind you. If it comes back against you, don't worry. There are plenty more options to trade, to go long or short. It's happening all over the place, over and over. Yeah, come on down. Finally gives way. See how the mean threshold is given? Come back into the order block now. Continue on the downside. Give me a big bold candle here. Come on. Break in market structure. Bold. Body. Break. Give me a fair value gap here now. Fair value gap. And you can get a full return back into reprice rebalance. Watch right here. They might just give us a small fair value gap right there. Do you need an indicator? VIX shows the volatility of the stock market. If it rises, if it raises, the stock falls. I don't use VIX. I don't use any indicators, my friend. Nothing. As you see, I've done nothing with any indicators. RSI, I have no volume indicators. I don't care how much volume is in the market. I don't care who's where or what company's doing what. It means nothing to me. I just trade algorithmically from array to array. That's all we've been doing this morning, is trading from one array to the next array. So I want to see this breaker hold price now and continue back down. I do not want to see us get back into that range again. So 1, 2, 3, 4. There's 1, 2. There's a 4-minute potential breaker. That may not be a 4-minute one. Let me have a look. Let me just go 4 minutes on that for a second. No, it's a 4-minute mitigation block, but I bet you it's a 2-minute or 3-minute breaker. Yeah, it's a 3-minute breaker and a 2-minute breaker. Two-minute for sure. See how it's hit the 2-minute breaker right on the money right there? Bang. So we want to see that peel off and come back down now. On 2 minutes. One minute. Right, just reach the high. Now we've got the valid order block. Now we're coming back into the range here between here and here now. Pull your fib tool. here to here. Look for a premium to unload at. Oh, my stomach's just churning away here. Mitigation block again, doesn't take out an old high, so return to mitigation at 50%. See how 50% lines up with mitigation? I want to see this close below. Wicks can do the damage. I need a bodies all closing inside this breaker to continue coming back down. If we wick up to 50% kick off of that, as long as we close below inside this candle, continue on the downside. Some people who are doing that breaker trade back to the breaker, which we've done a couple of times here already today. The breaker, trade back to it. Stop loss goes above this high. You don't want to see it get above that high. And you want to see it continue down. And we're not using VIX, RSIs, we're not using Williams percent R or any of that stuff. We just want to make sure that it maintains support at proper senior arrays and discount arrays. So if this has got strength to go heavy now, I don't want to see it come back way up into this range again. I just want to see it come off this breaker and continue down. If we're going back into the consolidation thing again, then we're going to go back above the 50% and get back into this range, and we haven't got really. We have a break-in structure now where I'm more bearish than I am bullish, but I won't get bullish again until I get above the premium array that supports a bullish run higher, and then we have to break structure to the upside again. Otherwise, you can see us slowly trying to get up there. Now we're failing, and now we're slowly but surely kind of working our way down. So keep your eye on the 50% range and this mitigation block. That's a premium. Again, don't want to get back up in there, but if it does, if you lose the 50% of that thing right there, or the wick, I'd be out. I would take that stop loss out, because now you don't want to lose the 50%. It's no different than any other breaker on the downside. If you lose 50%, it's usually your line in the sand, and if the breaker is what you're claiming to go down, you lose that on the upside, then you got more of this, you're digging deeper into the range. So let's just see if that happens. Or is this the 2-minute fair value, or 2-minute one that's right there would be the 50. Sorry, let me just look at this 2-minute. On the one, I'm going to stick with the 1 minute and say that we're going to go higher. But the 2-minute, yeah, we're above the 2-minute as well. So I'll look for a run back up into this range here again. We'll stick him on the sidelines for now. Yeah, I remember I got a friend of mine, he trades the VIX. He waits, there's a certain number that the VIX will show in terms of volatility when he's trading options, and he pulls out of his option trades just by watching the VIX, the volatility index. Again, way smarter than I am. Way smarter than I am. And he spent his life, literally his life, he's in his 70s, and he spent a lot of years. I think when he was a kid, he was starting to do his first investments, and he's been in the markets, you know, most of his life. And he looks at that VIX. And I was like, wow, I just want to stick to ICT stuff, man. It just seems so much more cleaner for me. So now we're starting to get up into that premium range we talked about. We're into that. See how we're starting to get back up into here. Drop is possible. Yeah, drop's possible. You're in the middle of the range, so you can call either side, my friend, for sure. Drop's possible. High is possible. We're right in the middle of this range, so your equilibrium, we're in a premium portion of that range. We're finding support off of these. If we blow through this, get support on it, now I'm bullish. we have a swing below a low. See that little fair value gap right there? There's the swing. Body breaks above it. We come back inside it right here, and you go higher. Aim for your first little swing point. You take out a piece here, take out a piece here off this breaker. Pull your range. So there's your swing point. That's another one of those swing setups. You see that? You break an old low. You see a swing setup right there. And I'm not form fitting this. I've been talking about this all morning. Body breaks the high of that, and then the next candle returns back into it. Body respects it, comes in it one more time. We run above. There's a swing point. Take some profits right here. Take some profits right here. Look for your, or pull your fib tool and do your 50, 62% that we talked about. This is a rinse and repeat of the same thing we've talked about multiple times today. So if you entered in here, you say, pull my fib tool right away. And I'm scaling out a portion here, scaling out a portion here, another one at 70, and I'm moving my stop loss up behind it, behind it, behind it. So right now you're sitting at, you've just hit 60, you're moving your stop loss up to here. If it comes back and takes you out, you paid yourself here already. You got 20% of the rest of your stuff off, and 80% is sitting in profits. And you're just doing a quick little snipe. Bang, right there, you're out. Move to the sidelines. Don't get upset if that runs the high now. You go, I just snatched more out of the market, and if it comes all the way back to me, I'm gonna white guy washing machine that sucker. Yeah. Right? You can be all happy about it. Because you caught the reversal, below a low, reversal, set up, take it, pull your fib tool 50. And that's not a Michael thing. That's just my method of trying to manage on the way up, using your fib tool to scale you out. Because if you're aiming for that high again, you're about to get squeezed. All that profit is being lost, and now it's coming back against you. And you're like, damn, I got to find a better way to manage my entries. How do I get this money out of here? Well, optimum trade entry, reversal. This could be the next leg down. See that? Now, if you want, you come back and start your trade all over again. Enter in here. You've paid yourself all that, so it's like putting a bunch of money in your pockets. You start your trade all over again now. Stop loss goes down here. If the body breaks below it, on a close, comes back to it, get out right there at a break even. And again, pull your fib tool. Inside this range now, fib tool, all the way back up to your premium array. 6 seconds, 5, 4, 3, 2, 1, you're still above. And you pull your fib tool again from here to here. As soon as you hit 50%, which is right there, for me, I would take that stop loss and go slammo, and I'd put it right there because there's no reason to come back down there. Take 50% out here. I would run that right up to behind that now because we're in a tight range. This would be a zero stress trade right now. I'd pay myself a portion right there. Bang. There's your first. Now move to break even if you want to do that. You've just paid yourself. Pay yourself again here. Pay yourself again there. And if it hits the breaker or the mitigation block, pay yourself one more time and leave and move your stop loss up behind it. And if it takes you out, so be it. Oh, there you go. Now go to 50%. Oh, take another one. Oh, go to 62%. Go on. Give me some love right there. Now move to 70%. Dip. Now it takes you out. You've got all that profit. So you got profit all the way up to here. And then you came back down. You got into the same trade again. And you made profit all the way back up there. You just traded inside that little setup twice. And we talked about it as it was happening. We didn't form fit it. We talked about it. And then if you left a little piece on for the rejection block or the old high, give yourself a bonus. Head back up into that order block up above you. Works, man. Really disappointing order flow. Stepping into this consolidation after new high is this common? I've never actually tried to determine whether or not this is common. As you can see, I'm just purely on a 1 minute chart going from array to array, and you're just looking for opportunities to get in. What happens? I don't care how many consolidations happen. I don't know how often they happen. I just trade one array to the next array. You just keep watching the out. Stay on the horse. Don't worry about the grass that you're running on. Just stay on the horse. If you're on a higher time frame, it's very frustrating because you're waiting for a setup. You see how this 1 hour here, you're waiting for your setup to form. We've gone through several hours now, but I just showed you multiple entries that you could have got in on and just capitalized with very little stop loss. And you move to break even super quick. And we're using our fib tool to scale us out in this range and scale us out in this range. And while these guys are over here are on a 1 hour still waiting for a setup, you guys are on a 1 minute chart staying on the horse. It's not bucking you off. You're staying on the horse. You snatch a bit of setup, you move to the sidelines, and you wait for your next setup. So I can't give you an honest answer. Sorry, Christopher. I don't care. I don't care about how many times we have consolidations. The CAM model, people say, bring me consolidations. I'll take a CAM model entry any day. And people that look for these little range runs and they go, okay, if it takes the breaker, I'll get in a piece here. If it comes back into, oh, it broke the low. If it comes back into that, I see that there's a fair value gap there. As soon as it comes back down to my entry on my breaker, I'm out and I'm getting back long here. So you can use this as fail safes. It's really about being attentive to where you are in terms of price and order flow and time, obviously. If you look at the range created between 9:30 open, watch this. 9:30's open. And 11 o'clock or 10 o'clock here. This is where 11 o'clock goes. Keep your eyes up here. Here and here. We've hit the mean threshold. With precision, we hit the mean threshold. These candles mean something, folks. They mean something. You're in a range. It's a senior array. It's a breaker. Hit it, come back down, hit the old high, get some leverage off of that, push through the breaker now, run for 50 to 62%. Rejection blocks, another order block above you, rejection block, 62%. Old breaker or old fair value, sorry, this is an old reversal up here that you could have got short on right there. So short, long, too short. Does that put us right inside that range of 50 to 60% on a retracement from 11 o'clock back into the morning's range? You're about to find out. You was about to find out. Mash up the carrot. Here comes the airplane. Maybe that will. Here comes the airplane. Here, little kid. Choo choo. They go choo choo train. Mash up the carrot. Oh, that's funny, Tristan. Order block. Come back, find some support at it. You want to keep pushing up here now. You want this propulsion candle to continue. I want it to get up into here right now and just see what kind of reaction we get. I don't want it to get all the way back down into here. I want to see that hold. If it doesn't, then we're already through the mean threshold of this one. So we might get a retracement back into mitigation block, all the way back into here. I don't want to see the mean threshold of this get taken then if this is our low. See how the body, we traded back up through the body here. Now you go, okay, now I'm coming back into the range again now because the mean threshold was taken. So what further can I come? Oh, I can come back to this. Okay, ideally you wouldn't want to see the mean threshold get taken. If it does, we're dipping down deeper, and then I'm losing my lust for the 50%. The further we dip down past 50% of this, the more I lose my desire to go higher. And it just becomes one of those smaller range again. So everything's based on your fib. Everything's based on that range that you're in right now. The order block low, which is this case is a breaker. This would be like a 2-minute breaker. So I like that one. And the fair value gap, I just want to see it tap in here and just start ripping it up now. Start heading her up because we're back into mitigation block. Last up close candle that does not take out an old low is mitigation. They're not as strong as breakers, but they're a mid-level support candle. They're stronger than basic order blocks, but they're not as strong as breakers. Watch the mean threshold here, which is the very bottom of the mitigation block. Come on, leave that open and go. Here comes the airplane. Tristan, that's a gooder. That's a gooder. The only time I use VIX is when I have chest cold. Oh, that's a strong, good use of VIX. Bro, this is not trading. Bab institution. This is not trading. What are you doing? Is that what WYD means? What are you doing? It's not trading. It's reading price. You don't see me dropping orders in here, but I'm showing you how price is acting off of certain levels. And if you can't see the accuracy of what we're talking about here, then this is clearly not for you. And you don't have to actually trade it. Just watch it. Just study price action. You don't have to be in a trade every single day. You just catch one awesome trade that will be good for a week or two. That's all you need. Wait for your ideal setup. I'm just trying to show you multiple different places, even in these consolidations where the market is still looking for, it's still running an algorithm. It's still running off of, they're not just random candles that are just sitting there marching back and forth. They're still hitting array to array. If you watch them carefully, you can still see them hitting those specific arrays. So mitigation is holding. You want to see this rejection block get taken out here now. And then start pushing for the 50% of the range we've created since this morning, 9:30. I think that EQ is very strong. We can see another rally up. Why? Where? Specifically. From what point? That's the part we want to get you to. Like if you see that rally, if your instinct, Maurice, is to tell you that this is going to rally higher, where's the point where you're going to see it? You expect it to rally higher. And where does that rally higher fail if you're wrong? And for us, it's going to fail if we get below this inversion or this fair value gap here. Ideally for me, if I start losing the mean threshold of this one, I start to lose my luster for higher. for short term. And if we break below the low of that candle, then I'd say we're going to go lower. We're not going to go higher. We're going to go lower. This is the support you'd have to go higher. This is what you need to have to go higher. So far that mitigation block is holding us, and now we've hit the 50%. So we've hit our objective, the first objective. Now next objective is up here. Blow through this candle here. So when you say you're expecting it to go higher, give me the point or the entry point in which you see it going higher. Where's your fail safe? Where's that point that you go, it's going to go higher? No, it's going to go lower. Like when you see me going, nope, I'm bullish now. Nope, I'm bearish now. And you see me changing inside consolidations. It's because of the inversions. It's because of inversions that I find that support. So here's your second attempt at this reversal, and now you're still cleaning. If you're still in it, you're still cleaning up here. You're cleaning up here and here and the high and that high. That reversal just paid you multiple times. So there's the 50 to 62% that occurs at the 10 or 11 o'clock reversal. You just hit it here, and we're back into the consolidation again. And we were calling that before it happened. Just in case you just popped in here. I'm not form-fitting this stuff. We're trying to read every candle minute by minute, and you'll see whether or not this is... You'll see if we're full of baloney. Within a few minutes, you'll see if we're full of baloney. If we're not reading this minute by minute and staying on the algorithm. You stay on the back of the horse when it's trying to buck you off. In this case, the bull is trying to shake you off. Keeps coming back against you. You say, yeah, I can see it coming back to here. I can jump off that bull onto the bear. Don't let it shake you off. If you read the algorithm correctly, you can stay on the bull. And all these other candles that you're going to learn from, the more you study the 1 minute chart and the better you get at staying on the bull, all your other charts, exactly the same thing. Stocks, bonds, VIX. If VIX is running on it'd be interesting. We should do this. If VIX has a candle system, let's look at the VIX and see if the volatility is actually algorithmically driven. People will be like, are you nuts? There's not a chance, man. There's too many factors. That's what they want you to believe. And I'm not a conspiracy theorist. I just love the algorithm, man. I just love what... you can't deny what it's doing right now. You can't deny the candles it's finding support off of. Once you see the support, they're not just random candles and random wicks. We've given you a level of precision that gives you a dynamite entry. Like once, twice you had dynamite entries, and you got to collect money on your first attempt. You get to collect money on your second attempt. And if you're still in it, you're still collecting money, looking at 62%. Again, is our upside objective here, and that order block right there. So we want to see these candles now provide a level of support. We've gone above, come back, found support on them, gone above, come back, find support on them, and just keep pushing. Well, they're like steps, like Michael calls it, steps on a mountain, hiking higher, right? And then think about the range you're in, and you're in a premium right now. So would you want to buy this? Hell no. You wait for this to hit, and you say, now do I have another continuation on the downside? Does this flip over? Do I get to see a reversal pattern now that I'm clearing out these highs like I did down here? When I saw this clearing out the low, you see this reversal pattern happen. It comes in, taps, and gives you an opportunity to say, I'm at an optimum time during the day of an 11 o'clock reversal to happen, 50 to 62% of the range, and I catch this reversal. Wait for this time of day, time and price. If you wait for time and price, which is what Michael harps on a million times throughout his career, time, price, expect the reversal back into the range the majority of the time. And as it pulls back into the range and we get closer to lunch hour, you wait for your next time and price swing point, breaking highs, the reverse to happen. It's the same thing. Algorithm offering discounts and premiums and discounts and it's just offering buyers and sellers opportunities to get into the market. The algorithm just runs. You put your volume in depending on wherever the hell you decide to get in the markets. And smart money understands this way better than I do, way better than Michael does. The people who are running this or the algorithm that's running the market, again, you don't have to believe me. Watch the damn charts. If I'm full of crap, you'll see it. You'll stick around here for a few minutes and you'll see that we have no idea what we're talking about. 526 people. I'm getting cocky now, and I don't want to do that. I don't want to be arrogant. I just want to say that I agree with what Michael's been saying. Price action is just crap. It's just crap. Don't hold back, Derek. Tell me how you really feel. We have stronger dollar dragging that lower, but we're still not dropping. Nope. Look at this. Are we going to hit the 62%? Come on. Give me my candle drop moment, my mic drop moment. Hit the carrot. 62%, my friends. 62%. And all that other stuff, did it make a difference? Nope. If we just kept getting support off of our mitigation block, we called that. Called the run up above, looking for the rejection block, finding these candles, getting a level of support. They kept giving us a level of support. Now we've hit our 62%, and the carrot gets to dance. Look for the order block now. Now, if we get a big bold candle up here creating a fair value gap, look for the reversal pattern to start happening anywhere. And then you're back into this guy to that guy. Pull your fib tool, same thing, rinse and repeat over and over and over again. We have a stronger drag on. This is like ICT church. Hell yeah. I don't have any gospel music for you, my friend Lambo. But yes, it's like, come to the preacher. I'm not the preacher. I don't preach religion. So, but it's kind of a funny point you're making there, Lambo. Fernando says, your operating style aligns very well with the quarterly theory. Your reading price is clear. Well, thank you. Oh, that's not that that guy's 90 quarterly theory or something. I don't know. I don't understand quarters theory unless it's ICT stuff and quarters and breaking my candle into quarters. That's the only quarters theory I know. I haven't read any stock books. I haven't read thousands of stock books like Michael has. I've just studied ICT. I was as green as grass. I had no idea what I was doing back in the day. This is all I know. I tried getting on baby pips and learning what tweezer patterns, and I was starting to get into that whole retail nightmare of trying to understand what a doji candle was and what tweezer patterns was. And thank God I was rescued. Michael came in and helped me. I joined his mentorship back in 2016, and I haven't looked back since. I just keep running over myself. I spent all that time running over myself, doing all the things he said not to do. I was like, I know better. You don't know me. You don't know me. I know me. Thousands of dollars later, Michael, you really know me. You really know me. You know what I'm thinking. There was times where he would talk and you would go, is he in this room with me? Is this mic on? Is my camera on? Is he listening to me right now? Is he in my head? He knows, because he knows the psychology of what you go through, right? So that's why I was having that debate with that guy the other day about, he was saying, oh, you've got to get into a funded account right away, like in a couple of days. Like, no, you do not. You will lose thousands of dollars if you do not have a solid trade set up. You do not belong in live money. Stanley, have taken any trades this week? Have taken any trades? Are you asking me if I've taken trades this week? Yeah, we've taken lots of trades this week. I've done live trades, which you won't see, and I've done demo trades. Now my question is, why are you asking whether or not I took trades? Does that mean you're concerned about whether or not any of this is true because I'm not trading? If it's so great, why aren't I trading? That shouldn't be your focus. Your focus should be, these are great. Why isn't he taking it? Well, I'll take it. If it doesn't make sense, then don't trade it. If what I'm saying doesn't make sense, just because I'm not trading it, doesn't mean that it's not logical. Look at it on your live charts if you want. If you see the same thing happening on your live charts, how do you dispute whether or not I take a trade or not? How is my taking a trade going to make it any more valid for you? If I see a good trade, I'll drop one in here for you for demo, just to show you, if that helps you validate it a little bit more. I'm just showing you the setups. You can decide whether you want to take it. If this was a signal service, you'd be loving it, because I'm giving you a ton of free signals. But I don't want to give you signals. I want to show you how the algorithm works candle by candle and what you're looking for. Look at that rejection block. Snap in there. If that rolls over now and comes back down, anybody aiming for that high will be cursing. Look at that big wicks up here. This could turn right into a big wick on the way down now. Turn our carrot sideways. We've hit our upside objective of this candle. We've traded through the mean threshold of that candle, so chances are we could be going a little higher. We could trade back into the range. Old highs, look for those. Pull your fib tool on the swing point, the most recent swing point. Look for an array that's a premium and a discount array. What's sitting in the middle? What kind of arrays can you get some support off of inside the middle? If you can, then if they've been evenly traded to all the way up, then you can start to say, well, it's either going to come slamming down on us, or we're going to use this as a propulsion to get higher. I tell you, this light here is taking some getting used to, because it's just constantly in my eyes. Otherwise, I'm going to look a heck of a lot older if I don't have it on this. So it has to be there. So there's the higher run. Yeah, I can't trade this with any sense of confidence. Then you do what Derek does. You stay out of it until you see something with a level of confidence that you're sure about. That's what makes Derek awesome. Sherpa. Furba. There's my buddy Furba. He's positive. You're positive, right, Furba? It's in your head. You're thinking positive. You're talking to yourself in a very positive way, right? Right? Darren, what is the New York close time? The New York close time is 4 o'clock. Is it 4 o'clock? 5 o'clock. 5 o'clock. Because it's 3 o'clock here for me. That's when the time ends, and then we go into that little lull for an hour and then pop back on again. Fernando says, congrats, Darren. Great job. Thank you, my friend. Thank you. It's like people have nicknames with me, but Fernando just gets Fernando. I just love the name. It just seems like a sexy name. It's like a kind of name you want to say, hello, my name is Nico Montoya. You killed my father. Prepare to die. You want to pause for a moment when you say your name. My name is Fernando. Hello, Darren. OB Trader, welcome back, man. How's things? I really want to thank you for helping me understand several important points in trading price action. Well, you're very welcome. You're very welcome. I'm happy to do so if I can. If I'm confusing you, please ask questions and I will try to clarify it. Again, everything we do in here is based on ICT, Michael's stuff. He doesn't pay me any dividends for promoting his stuff, but I'm more about promoting your sanity, your mental sanity, by understanding what he's taught you in his trading. Literally, if I give you any advice, ditch everything you've ever learned and just focus on what you've got in Michael's material. Start learning it, come here and apply it. Or find a way to integrate what he's done with his stuff that gives you a level of accuracy like you're seeing in here, and form fit it. That's why I want Maurice, if we can get that RSI thing, if I can, I don't know, I've used RSI before, and it's not, or TXR, I think they call it. There's another indicator in there. I tried building bots around it because I thought I saw RSI would be great. When it passes by the 70 or the 30, you're starting to, and I built bots around the 70, 30. If that crossover happens at that point with the moving average, that, oh my God, I wasted hundreds and hundreds of hours building bots around that, and it just waste of time. But if we can find something that ties this kind of accuracy with your RSI indicator, and your RSI indicator is consistently showing you a specific point when this pattern occurs, then we're tying in, we're integrating some of that, the stuff that Michael has with some of the stuff that you guys have been doing for years, if you're a retail trader. And yes, we do consider you retail traders. If you're not Michael's stuff, you're retail. And that's not an insult. That's just, it's just a different type of methodology, a different type of thinking. Same with fundamentalists, those fundamental people who look at fundamentals. That boggles my mind. I totally have respect for fundamental people because they have so many variables that don't give them any specificity for me. If I can go, look, man, all I care about, I don't care what's happening in the world right now. I see this, I'm getting in on it, and I'm aiming for my objectives, my PD arrays. I have no idea what happened in the world. I don't know what happened in a boardroom. I don't know what news events happening. I don't care about what Tesla's up to. That's my entry. I get some money, I come back, I can do it again. I'm in there. I have no idea what's going on in the world. I am trading the algo. None of that other stuff means a damn bit of difference to me. VIX is nothing. And that doesn't mean that you're wrong. That's where my level of understanding is at. And it's very crude, perhaps, but none of that stuff. And that's all stress that I don't have to endure. I got a buddy of mine, Tex, if you're listening, way too much stress. He spends way too much time studying all those things about what's going on around the world, how this market affects us, how China's going to do this, and how the war is going to affect this. Like, they're still firing bullets. People are still dying. The terrible things that are happening in the world does not change my entry and my algorithm and what I'm reading. Maybe it's very simplistic, and I don't want to belittle, and it sounds like I am. It's just showing you my level of understanding, as crude as it is, but it works. Six, 8, 9. 6, 8, 9. Take these highs. See how these equal highs are formed here now? Look for more upside prices. This is the 692. Look at this one here. 691 to 692. We talked about this one to this one, or this one in a higher range to that one that was never hit. So watch this level here. If it turns around here, you'll go, what? How can this be, my friends? How can this be? Oops, I don't want to. Wait to see where that closes. Give me some wicks up there. Hold off on that. Come back down. Create a fair value gap swing above these highs. Then get short. That'd be nice if it took that high out. Look for rejection. Oh, it is going to go for it. Good. Go for rejection block. Take that high out. Look for a swing reversal. And coming back into that, a new high once again. If we just get wicks that close up in here and we get a fair value gap forming and then it blasts through this, comes back into it, the stop loss goes there, your entries go there for a short, back into this guy, pull your fib tool, same rinse and repeat. And don't forget your fail-safe. If you don't have a fail-safe, don't just try to take this trade if you don't have a fail-safe. And there's a Bitcoin reversal happening if it comes back down. Look at this happening on Bitcoin right now. Reprice, rebalance, run back up right through it, right there, and you opened up on it right there. Now you're going long. Literally, as it you're saying, oh, I'm going to pop my trade. As soon as it closes above that, pop my trade in. It gapped down and took you in, and then ran for liquidity, liquidity, and liquidity. Over and over, my friends, on Bitcoin. Crazy ass Bitcoin. Does it happen? Yippee, 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 yip. It does. And I don't know what's going on in the world of Bitcoin right now. I don't know what's going, how all these economics, all these people that are telling you Bitcoin's this, Bitcoin's that. I don't care what Bitcoin is. Bitcoin's got an opportunity to make money on the, just the simple swing pattern. Stop loss, 1% of your account goes here. If you're entering in on that, 1% goes there. Using your fail safe if you drop below that point there. And the moment you take your first one, slam it up against break even, you have a zero stress trade, money in your pocket, and wait. And every time it breaks the next higher PD array, pay yourself some money, move to the previous PD array, and if it comes back against you, who cares? It's going to happen again. It happens every hour. You'll see a setup in there. It is a veritable buffet of all the things you want it to do. Oh, look, it did exactly what we wanted it to do. We have a little inversion. We have a body starting to close below. Come on down. Come on down. There you go. Now let's put a little trade right in here. And if I'm wrong, we'll use our stop. Now if we get two, yeah, we only had one trade through. We didn't trade through two of them on a body. We had the first one. So I want to see it trade back up into this. Ideally, you'd want to see this one. And then we'll wait for our fail safe. And if we don't get in, we don't get in. Who cares? On your first rejection block, if these guys get taken out before that happens, then I'll move to the sidelines and wait. Because this is our objectives we're aiming for. So if your objective is hit first, then the swing happens. You could get the same thing happen in the opposite direction. Then you don't want to counter trend something that's going in one direction and one that's going the other direction when you have a bullish tendency to go higher anyway. So wait for the reversal. In other words, if you're in this long and you see this first pattern happen right here, you're out. So if you're managing this on the way up, another way to manage this is instead of a fib tool, you just keep managing and you wait for the reversal to happen in the opposite direction. And right here happens. We have a break, come back up inside it, close out that trade there. That's just a waiting, just leave your stop loss, move yourself into break even, and when you've made first profits, and then just wait. And every time it breaks a new high, you get a new fair value gap, and you stay above it, and you start another new fair value gap, stay up behind that one. So your fail safe is a dynamic thing that follows you. And then when you see that reversal pattern happen, you've just gone all the way up here. Markets have told you now, I'm reversing, I'm going in the opposite direction. Okay? People up here have no idea that the market is reversing right here. You guys are seeing that on a 1 minute chart. Body's breaking below here. If this closes below this, look at this one and this one, this one and this one. If you're going to enter in here, 1%. 1%. If it trades above you with a close, then you're on the wrong side and it's going to go higher. This is where it can go into consolidations and you go, I'm bullish, I'm bearish, I'm bullish, I'm bearish. Because you got a premium array and a discount array inside a small little range right here to here. Now you've hit the rejection block. So now you look for that, ooh, are we just gonna, I don't want to see a reversal pattern happening here. I just want to see a wick come back and still keeps me in because I don't see one of these reversal patterns happening. We haven't swept below a low yet to tell me we're going to go higher. So we have just come back into an order block, rejection block. And if we do go higher, we're about to lose the premium array on the upside. So my entry is right in at the end. So if we lose it to the upside and come back and tap it, then I'm out and it didn't cost me anything. My stop loss hopefully doesn't get taken if we don't get the run right away. And we get on along. You can go long at that point. Not that you would because you're in a late in the day. We're just about to approach lunch. Here's your lunchtime high. Takes out everything before or from 10 o'clock. 9:46, 10:20. So it's taking all that out. Reversal pattern. Now you want to see this still come back up in here. We've got, see how the body's traded below it right there? You've tapped into it. You're in the discount array. You want a premium if you want to get short. So that's why I'm waiting way up here. If I don't get my entry, I don't care. I don't care. Let the price come to you. If it doesn't come to you, if you jump on this every single time and you gamble up there, you're gambling. Have your trade plan, start to finish. I've explained what my trade plan is going to be and where I want to start scaling out my profits. I want to keep the carrot up here because I want it to come to me. See that? You put the carrot there and it starts to move. 4 p.m. is the close. Derek says 4 p.m. is the close. So Verba, hopefully that helps. New York close, 1 hour is aftermarket. Okay. Then 5 to 6 down. Okay, tank. Says Lambo saying let's tank. Smooth relative equal highs, lots of buy-side liquidity sitting above these points, yes. But as we know from the rejection block, we could be denied yet again. Workout Warrior, my Canadian buddy. Dang, can't hear you at all, brother. Can you hear me now? Can you hear me now? I'll give you one of those guys that talks into the mic like this. I keep turning my head to read everybody's charts over here, so I'm going to move my mic over so you guys can hear me actually reading some of your comments. Is that a little better? Can you hear me when I put the mic over here? You should be able to. I don't want to crank my volume right back up again and annoy the crap out of you guys. Furba says, thank you, Derek. He's a good egg, that Derek. One good trader next. ICT Church, LOL. Dave Barry, I've had somebody come into my office and missed it. Good thing I know it will happen again. Yes, Dave's been studying that. We've been doing some trading together on Bitcoin, and he is getting really steely-eyed at looking at these things now, and he's picking them up really quickly. So as you can see, don't get yourself upset. Don't worry about it. More setups are coming, my friends. More setups are coming. Like, I'm not getting my trade right now, both this one or this one. But see how we've gone through the second one? The bodies have traded through it right here, right there. See that? We pop into it. You collect your first bunch of profits down here. Pay yourself, because if this runs back up into here, because we can have this run back up, catch this, and then finally run back down. Now that it's taken those out, I'll move to the sidelines and I'll wait and see. Notice we don't have a swing set up here. There's no reprice, rebalance swing point. So if we get a run all the way back in there, it could be a valid place to catch a short. And that's right off that old one over there too. Remove. Say good morning. I have my alarms set for specific times. We haven't really got into time discussion, and I've been so wrapped up in this inversion, flipping reversals and cam models, and I haven't even talked about the precision of time yet. Maurice, that'll really freak you out when you start seeing precision of time when we're expecting a candle to turn at a specific time. That'll really blow your mind. Fernando says, I insist Bitcoin. I insist Bitcoin. Yeah, Bitcoin's in a bit of a consolidation right now. If we can come all the way back down into that little point, right, you have to put it right here. You got here to here. Stop loss goes here. If it trades below, pops back up, get out, because it's going to run for your lows. If it comes back into here, you want to see a wick, tap it and kick off of it. So wait until you see that. You want to see that just rip off of that real quick. If it rips off of that point there, you can get excited. The moment it breaks the high again, move into break even and wait. And wait. If it comes back down and tags you, then wait for a better setup, because there's way better setups that are cleaner. Because this one here that you got here already took out our objectives. So if it comes back, it's like I've mentioned before, it's not as fruitful as if it comes back a second time. If it does, then you can get long on it as long as you use your fail-safe. If you have a fail-safe, you must have a fail-safe. That's just my belief. You got to have a fail-safe in your trades, otherwise you're going to get beat. Your stop loss is going to get taken and you're like, oh man, I risked a lot when you didn't need to. There's a fail-safe method you can use that will protect your stop loss. Sometimes majority of the time, better than 50% of the time, it'll save you in the long run from getting your whole stop loss taken. And there will be times where you'll get out too soon and your stop loss would have held and it takes off. That's up for you to decide whether or not you like that method of a fail-safe, or you want to protect or you want to do a little bit more of a, hey man, I trust my stop loss. Lambo, you can use RSI ideals on a weekly candle, bullishness. Anything below the open price wick, Judas swing is oversold. Opposite bearish above the price wick, Judas swing is overbought. Yeah, but what's in an RSI, your overbought sets at what, 70? Where do you set your overbought indicator at? 70 and 30? I think that's what I used to use. If you're above 70, you're overbought. If you're below 30, you're underbought. Or oversold. Underbought. Oversold. Russell, the market loves carrots. It loves carrots. See, it's just going sideways because my carrot's over here. That's why it's waiting. It's going sideways to the carrot instead of up or down. We're in a consolidation. Aren't you happy? Would you be glad now that if you took that you paid yourself at rejection blocks and lows? Rejection block, this low did not get taken out. Aren't you happy you paid yourself? Because right now you're underwater again if you hadn't. Quick little snipes. Be prepared. Don't look for the big bombs. If you do, you're overshooting way too many PD arrays. Wait for something clean. If it doesn't happen, pay yourself right away. Move to break even. And if it takes you out, wait for another setup. That one being up there. And the fact that you're consolidating right now does not make this exciting for me. You want to see something go down, rip up to it, and then rip away from it. Not go sideways like this. So sit and wait. RSI using ICT concepts, the power of 3. This was the ICT video Victor just posted in Telegram. Oh, okay, good. You go to our Telegram channel. That's where the community meets up for our aftermarket parties, our aftermarket discussions about the day, about what they're trading. Sometimes in the evenings we'll get together for a little one-on-one session, and I'll do Bitcoin. I like to trade Bitcoin because I'm trying to get that one account over 100% for the month. That's my goal. I'm 6% away from completing that. And yeah, so we'll actually do some stuff on Bitcoin because it's fun to kind of trade that one right now. There's a lot of people interested in it, so it likes to go up and down and shake people off, but it doesn't shake you off if you know what you're looking for. That's how volatile. See how much fear there is about Bitcoin and how you're like, there's no way I'd trade Bitcoin. Why? Because the world has convinced you that it's a terrible thing. There. So wait, watch here. Now we're going to wait to see if this takes, rolls over and goes. Stop loss would be right there. It's where I had my original entry. Now that's the kind of snap off you want to see. You see it snapping off like that. You don't want to see it coming back, running back up there, because if it closes above here, then you pull in your fail-safe rule. Execute the fail-safe rule before it takes your high out. And if it fail, I want it to fail so you can see the fail-safe rule work. So 8, 7, 6, 5, 4, 3, 2, 1. And the fail-safe rule didn't have to use it. So far the trade is looking delicious and looking lovely. As soon as it breaks this low, I would be like slammo. In profit, zero stress. And you let it do its thing. Aiming for the first objective. There's your first one. Order block. Because you're inside this range, so they got this order block sitting right here. And it's a breaker because we run above a little swing point. So if you get some reaction off of that, you'll be glad you paid yourself here. You move to break even. If it comes back against you, who cares? You've taken a piece off here. You can take a piece off at mean threshold. This is silver bullet time. And yes, you can get silver bullets every hour. They're available if you know what you're looking for. So as soon as it hits rejection block, pay yourself again. I'd be marching my stop loss down here. You're in a consolidation. I'm not putting a lot of faith that this is just going to be the big driver down now. So you want to nibble your profits and protect your investment. So right now I would be, if we haven't hit that rejection block yet, I'd be sitting right here. If rejection block hits, I'll go right there. So you're automatically in profits from there to here, guaranteed. And I'll leave the line there so you can see that that's where the stop loss would be. And again, your focus should not be on whether or not I took the trade. It's whether or not you see the logic behind it. The market loves carrots, yes. How about a poll about what direction, if any, might be seen in the PM session? Ooh, a poll. I'd rather see a poll with an explanation. Give me a, otherwise you're just polling guesses. Tell me why and where you think it's going to key off. That's more impressive. Pick the right direction, that's great. But pick it off of an order block, pick it off of a specific entry. I'd be like, now I'm impressed. Because now you have a specificity. You have a plan and not a guess on a direction. For PM session, I'm going to give you my guess, Derek. My guess is we're going down, because I'm going to stay with what I've got right here until proven otherwise. I may adjust my ballot. I may reach into the box with my grubby little fingers and pull my ballot out if we break this high here, and I will change my mind and I will go long. And if it breaks back below me again, you'll see my pencil crayon will be erased and I will go short. And I'll hold my ballot to the last minute before I make my decision, because it will all be based on whether or not we get above or below inversions. Right now we have a reversal happening, so I'm bearish until we get above this spot here. If we get above this spot, we have a little swing, then you go bullish and you're aiming for a rejection block above you again. Now, aren't you glad that you paid yourself from here to, did you get the rejection? Nope. To there. And then you got out right there. You paid yourself. Now you just sit on the sidelines and wait. You collected more money in your pocket. You've had multiple entries here that you've had, I've given you throughout the morning. Off of candle by candle reading, man. Candle by candle reading. Give me a reason why you think it's going to go higher. Just because we're sitting up near those wicks, they're just so tempting. Do you see all these probes that go up, trying to get up there, and we're just not getting up. We're failing to make that higher push. This one could be just a roll back into the range, back into this old order block or old high here. Look for that. And then I've got nothing on the daily. I have to go, let's go to a 4 hour, see if I can find something in the 4 hour for you. That high, that order block. Is that a reversal one? Low is 89, or closes 06, open is 10. So this is a bearish candle. So I would like to see this start to crawl back down into this candle's. No, I got nothing really. I got nothing on that. Let's go with an hourly basis. I got nothing on hourly either. This may just turn into a wick now and come back into this range. I'm going to say lower. As a guess. My feeling is that it's going to come lower. So I'm going to stick with this 1 minute objective right now. Oh no, we've closed above it. I changed my mind. I'm going long. See how we changed? Now we've closed above. Come back, find support, push higher. Look for that one, look for that one, and that one. You've paid yourself here. Move to the sidelines. You're between this reversal and that reversal. Inside a really tight range here right now. welcome to consolidation. And now you know why this can run up to here and here and here, and this mean threshold of that candle. There you go. There, there. Just what we just said, run there. So that's where I changed my mind. See, I was right. This way you change it. I'm bad. No, I'm bullish now. I'm bullish. Right there, I'm bullish. So if you would have just said, okay, I'm out of my trades here. I've made my money going that way because I used my rejection blocks. And then the moment it broke that high, I went, ooh, I'm going long. You jump in there real quick right when I was mentioning it, and you aim for those highs I was mentioning as it was running up. You grabbed yourself some more money. Your stop loss now moves right up to here. You're now zero stress trader, and you're going long. You got to be quick, though. You see how fast it can happen? And how quick you got to be on the ball? And are you executing on that? Do you trust those arrays enough? It's easy for me to point them out to you. Have you seen them enough to trust on them and go, I'm in this. I'm going to go nuts on it. And then do that in a real account. It's one thing to do it in a demo account. The next thing is getting past this, because the real doubt will creep into your head when it's your live money on the line. Right? When it's your live money on the line. See, now we've got a new swing high occurring. So now you've taken out that high and you move to the sidelines and wait. Pay yourself if it comes back to here and takes you out. Why? Because we got another reversal happening right here. See, when you get consolidations and you get these reversals happening, you switch I switch up again to a bearish belief if we get below this and close in, come back, find some shorts, aim for this objective here, this objective, that objective, rejection block, and further rejection. No, it's not rejection block, just right down here is rejection block. This last lower cluster here. And this inversion, once again, you're coming back into it all the way down to the bottom. And you're between that guy and this guy. You see? And if you don't close below it, you keep going higher. That's good too. Premium discount. If we get below this candle, then you're inside this range. This is your discount array. Right in the 50% mark. You want to see this keep going up now. Start running for your rejection above you. Excuse me. It's 10 o'clock. I might be calling her quits now. Hopefully you guys have seen enough. I've shared enough awesome detail with you guys today. And you can see, even on a 1 minute chart, even watching every candle form, we're picking some laser accuracy, man. Some awesome trades, even amongst all this mess. We were able to pick highs, lows, turns, excellent entries, manage stop losses, getting in and getting out inside tight consolidations. Hopefully you've seen that today. And I'm glad Maurice and Invest, you're back again. Hopefully Invest, you got a chance to see some of the stuff we were talking about yesterday before I had to make a rather abrupt end to our show. I had a meeting with my wife. I had to get downstairs. We're on a video chat call. So Maurice, I hope you got to see some accuracy in here today, and I hope you're able to find a way to tie that in with what you already know with your retail thinking or your retail training, or whatever methodology. Let me put it that way, because I don't want retail to be the swear word of the day, right? I don't want it to be the one that you kind of, oh, you're a retail person. Your methodology, whatever methodology you've got, hopefully you got to see some of the accuracy you can get on a 1 minute chart here. And when you look at that, and we look at your RSI indicators or your ATR, I think it's called ATR. There's another indicator you can use, or your Williams percent R or whatever. Does that coincide with your RSI indicator better? Does it kind of tune it in a little bit more for you? Is what I'm looking for you. Hopefully you can find that. Shorter. The fair value gap at 16,694 when it looked like it wanted to reverse. When it looks like it wants to reverse, or when it actually reverses. That's where you got to ask yourself. It looks like it wants to reverse. Here, actually reverses when that candle closes below that candle's low, or right, that candle's high right there. It's got to close below that, because we're inside this one and we're inside this one. Are we going higher or are we going lower? When you can argue both sides of the market, and you'll hear Michael say this, if you can argue both sides of the market, you stay out. Because I can say that's going to go higher. I can say that, no, it's not going to go lower right now. It just ran down to a discount array and we're still going higher. So I'm not short yet. I'm still going higher. That has to get broken on the downside with a body candle before I change my mind, because we've taken these swings. Otherwise, this guy here is still going higher. And that's as detailed as it gets. If it turns there, expect it to go back down. And you don't have to believe it. Just watch. And if it doesn't work out, where did it run to real quick to a discount array inside the range you're in? Like, pull your fib tool here. I love this fib tool. It's a marvelous piece of kit. Look at that, 62% retracement right inside that little range. Bam, hits off of it, and we're heading back. I just wanted to get a discount, it says. I've engineered some liquidity here. Let's quickly grab all these short or all these long people, snap in, take them out, get a little discount here, get back to an order block, and rip through all the people who are going short. Nothing proves that this is going short yet, you guys. So what it looks like and what it's actually doing, get yourself to the point where it says, where you say, no, it's absolutely not doing that until I see this. Because that's where you guys are going to put your stop loss. That's where your fail safe's going to go. Because when that point fails, you know it's going in the opposite direction. You can now go into a trade feeling more comfortable about it. You can feel more safe with your trade, because you know at that point, I'm expecting the market to go in a different direction now, because we've broken a specific set of arrays or whatever. And if you don't understand the arrays, study Michael's stuff. Go to his core content. It's all free. Don't go pay for it from anybody. Do it for free. Come back here and we'll show you how to implement it. I'm all about helping people here. I'm all about trying to help you guys out, get to be better traders and better people. If you can feel better in yourself and feel calmer in yourself, you'll treat people better. You'll feel calmer. You'll feel more generous. You'll help more people. It's not just about moving candles here. I want to shift the world. I want to shift people's thinking, kindness, sharing. This is the place to be kind and share. If you're a troll and you're in here to just grab things and run, grab your stuff, get a couple of free trades, off you go. But if you're here to genuinely want to help people and be part of something that moves people forward in a positive way, you're in the right place. There's some awesome people in here that are keen to help you out. And if you've already been studying ICT stuff for years and you want to hone your skills a little bit more and you want to share stuff, hey man, I'm still trying to hone my skills. As you see, I'm still trying to press the go stop button. One day I'm just going to go, okay, I'm going to go long here, I'm going to go short here, I'm going to go long here. I can see them. I just got to get that finger over there because I'm still working on this. I did all the wrong things. And I don't want to use that as an excuse not to make my trade. So that's my own personal journey I'm on. Anyway, so we've got relative equal highs here. So we've already dipped down into the discount array. I want to see this run up one more time above these highs. And then again, you look for another reversal pattern. Every time it breaks a new high, look for a reversal. And does it get validated? And you want to see, then you see, okay, when it gets validated, How does it get validated? Does it get validated with something that's really robust? Like, is this a really robust kind of drop below that low when I've got my targets are sitting right here? No, not really. This one here, it broke above, tapped, took out those highs that we were calling just as it was happening. Came back into it one more time, give you another opportunity to reach up into a rejection block again. Now it's coming back down, so we got 2 attempts to get back up there, and you got to collect on both of those. I would move to the sidelines now and wait. So if you were long on that, move to the sidelines and wait, because you're just, this could take off again, and you say, Darren, you got me out. Who cares? You'll get another one. Where's the carrot gonna go? Shorter down for me, DC. Shorter the fair value gap at 694. Out when it looked like it was going to reverse invest. I think that's because Dixie, the dollar, stopped being stronger, so buyers EQ can boost now. Wow. You see how that, Maurice, that just feels like there's a lot of generalization going on there with no specificity. I'd say, yeah, I'd be all for what you're saying if you could say, where's your entry? Based on what you just said there, and I'm not attacking you, by all means, I'm not attacking you. But if you have a general information, you'll have a general approach to the market, and you won't have anything concrete where you say, I'm buying in right here and I feel good about that. I'm solid about this entry because I know all that interesting stuff that you learn about how the dollar affects ES, and ES, people are moving in and moving out. Well, if that directs you towards ES to make your move, get into here and watch the price action happen. If all that information says we're going to go bullish in this market, there's lots of people piling in on this, I'm going to look for my entry, time and price, and I'm going to look for my entry on a 1 minute, and then ride your ES all the way up, continuing to use all that extra knowledge you got about fundamentals. So now we've taken the high out that we were expecting. Take a look at S&P 500, he says. Okay, let's look at the S&P 500. Still going higher. Good. Look at all this noise in here, hey? Or does it mean anything to you? Swing point. Reprice, rebalance. Body breaks above it. Comes back into it. Go long. If you don't like that one, look at this one here. Body break. We haven't reached a higher PD array yet. You got this order block here. You can take that one, this one. You body trades above it right here. You come back into it right here. And you go long. Rejection block. You're out. Reversal right here. Body trades below it. You get back into it right here. We've taken out a little high right here. You've taken out these highs here. You get back into it. Stop loss goes above you. You take a rejection block inside the range. Deeper range, 50%, all the way back into, look, this fella here again, trading from one to the other. You're out. Look for a reversal. Do we break above it? You come back right here. You come back into it. Aim for your first rejection block, and you're out. Small, quick little run off of this inversion here. You hit it. Wait. We've got nothing in here, nothing in here. Is that one there? Let's have a look at that one. Yep, there's one right there. So you have an imbalance right here. We've swung below these lows. Imbalance, fair value gap. Body gets above it. Trade back inside. Stop loss goes here. You're running back up into 50% of your range. Start using your fib tool to scale you out. Move up accordingly. If it comes back and moves you to break even, you move to break even. Wait for your next setup. Oh, we've got another one sitting right here. Though it's not a swing, so I wouldn't consider that one a super valid one. I am using this. I do see this happening here. So you see this If this occurred down in below here, then I'd say, yeah, that'd be an awesome little, as soon as it breaks above it, get back to it. Right here, see how body gets above it, come back to it right there, perfect entry to go long. But you want to see this happen below a swing, not just every single time that happens. Though you can look at that and say that's a mitigation block. We trade above mitigation right here with the body. You come back into mitigation right here, continue back up for higher prices and your eventual breaker up here. Consolidate. We took out a low here. Body breaks above it right there. Multiple times to get in. Stop losses down here. Run for the high. Up. So I'm giving you multiple places you guys can get these trades. Over and over and over again. You got to study them. If you don't believe me, just study them. You'll see them happening. You'll see them happening. My algo, or John, that's where we at here. I think because take a look at the S&P 500, my algo is almost matching up with your entries and exits. Check it out on YouTube, OTR Trading. I built a smaller time frame for NQ. Well, no shameless promotion there. Is that all based on ICT stuff, John? If it is, then if it's based on ICT stuff, I support it. If not, I'm not here to sell other people's charts that are not. We're sticking with ICT germane stuff here. If you want to promote your algorithm, you can do it. But, you know, I'm not interested in promoting an algorithm that's not ICT related. Fernando, thanks for sharing your knowledge and time. You're very welcome. Haran, hello. Robert Ramirez, I just found your channel. You just won a subscriber. Thank you, Roberto. That's like Fernando. Roberto. I like that. It's a good name. It rolls off the tongue. Roberto. Love the simplicity on how to read the chart. I was able to make the last trade short from 94.5 to 82. Good man. Good man. So now you see you have a reversal happening. Do you see it? It's tiny. It's itty and bitty. And it's coming back to the carrot. See? Coming for the carrot. Rejection block. Pay yourself. One to the other. One premium to discount. Premium to discount. Watch right here. You can do it. Put the carrot to it. You can do it. There you go. Back into it. Premium, discount, move to the sidelines, have a nice day. Slap your fib tool on that, 50, 62 all the way down. Same thing. Let me give you a little carrot action down here. So we're short right now. I found your channel, blah, blah, blah. Thanks, D. You're the best. Sure. Lambo. John, agree. So yeah, John, if it's ICT, if it's based on ICT stuff and you've developed an algo, we'll all come run and buy that. I'll be all over that. If you've tied this into an algo that is ICT related, or if your algo bounces off of all the ICT points because you've now discovered the algo, John, I want your algo. I want what you got, buddy. I want what you got. Maurice, yes, fib is interesting. Am I convincing you, Maurice? Invest from yesterday? Are you starting to see some clarity here? Are you starting to see something that looks a little voodoo-like? A little something like, wait a second, did these guys got something here? Is there something to what they're saying? We've been on here for 3 hours now. and we're playing in the 1 minute charts. Thank you so much for all those people who are popped in and spending your time with me. I can't tell you how much it means to me to have you guys share your time with me. I know there's lots of people out there you guys can work with and watch. But hopefully you get something here that is a level of understanding about the algorithm that other live streamers are not giving you. Or if they are giving it to you in this level of detail, then excellent. Stick with them. And it's working, stick with them. They're great people. My buddy over there at HYPOTHETICAL, he's got about 42,000 subscribers. He does some awesome trades. If you want to get some good signal service and you want to catch a good trade, he's very compassionate, very cares about making his entries. He wants to do good entries for everybody. His reputation's on the line. I'm just going to show you my faults. You get to see me transparent, man. I will screw things up, and I will own them. And if they pass, they go great. Hopefully you get to learn a little bit. You'll see me fail. Hey man, I'm a human just like the rest of you. I'm still battling my demons. Don't trade live until you're ready. Please don't do it, because you get this battling that kind of the demons in your own head. So not fun. Now you see we did not break that high right there for the reversal. See that swing? We did not break the high to the upside. We just came back, tapped it, and coming for carrot, baby. We're still short. There was your linchpin for higher, because we swung. We did not get above it. We tapped it and took off. So you have more downside. So when you're looking, so let's say your stop loss was sitting up here. Let me put the sticks in here. I got to do this one more time before I leave. I want you guys to see this. I want you to see the logic behind this, okay? I put the sticks in here. I call them sticks. These are like our little yard markers. So let's say our stop loss was sitting here. We entered in on our little swing pattern right there. See how we broke below it? We came back, tapped it right there. You're in for a short. Now, the moment we break this low, stop loss goes to break even. Now, this fair value gap, you do not want to see that break to the upside now. So now your stop loss, that's your fail safe now, because you know if it breaks to the upside, you're going up. So your stop loss trails down to here, and you go, now I wait. If I get another low, once I've got this one, that low there, I'm going to move my stop loss down here. I've already paid myself there. It comes back, takes me out. I've made that much money. 90% of my money was made there. 10% was there. Another 10% was there, and the other 80% closed off right there, right below these lows. So if this creates a fair value gap here right now, see this forming? Rinse and repeat. See that fair value gap? Now if that runs up through it, comes back to it, what do we got? We got the reversal pattern. And aren't you glad you paid yourself on the way down? Inside a consolidation, quick, snappy way to make some cash. And who cares if it bolts down here right now? Who cares? Don't get used, because that's the negative crap that you put in your head that makes you self-doubt your trades. And yet if it turns against you, you'll be like, oh yeah, that's positive. You're just reinforcing gambling mentality. Logic. What's my fail safe? What's my reason? My trade, this is a super tight trade. If I snap some profits out of this, I'm out. I'm good. See how it's come back into this now? If it trades above it and closes, then you're going to be like, oh, I was gambling for down here. Well, way too many PD arrays, man. Way too many. So now we've traded above it. See that? Now we're going to go higher. Is this voodoo? Is this the voodoo that you do, my friends? So we've run that high. That's a potential point to get some money out. It's so close. You say to yourself, yeah, do I want to be in that? What range am I in now? Am I in the discount range to catch this to a bullish range? There you go. Look at that. It literally came back and tapped you in and then woof, took off. I would take my stop loss and go, erk. And I'd slam that right up there. Break even. I'm out now. Did it reach your order block? In your premium array? From there, it literally tapped you in right there and then shot right up to your array. So did you pay yourself at that point, or did it just snap up, snap down, and take you out? You're in a consolidation. You got to be quick, people. But premium discount, that's how quickly that happened, all in 1 minute. Snap took you in, snap took you out, all in about 10 seconds there. Now you may say, well, that's not enough. It's not even going to pay for my trade. Well, if your stop loss is here, you came back into your range here. We have not had a body trade below this yet, so fail-safe is still good if you're using that as a pin, as your linchpin to go higher. So now we've traded back into it here. Bodies are respecting that. We have not had one trade below it yet, so we don't have to worry about trading back into it to get our fail-safe out. We're going long, so look for your next PD array here, rejection block, and higher. Or this array to this array. Remember? Premium array to discount array. So if that's where you're trading up to, right there, get out. Move to the sidelines, you make a couple of bucks. Not that you're actually doing it, but I'm just trying to show you why the logic is that now we're in between these two. So you want to see one of these guys, this has got to hold to go higher, or this one's got to hold to go lower. And we're in that tight range. So now you sit and wait for it to break out of there. Wait for it to break out. Wait for it to break out. Just found your channel. Thanks. You're the bestie. Agree. Yes. Fib was interesting. Can you post the link to the content? Jack Sims. What content? The cam models? Or are you talking about Michael stuff? Just go to YouTube and type in ICT, and there are hundreds and hundreds of videos. You can spend the next few years studying his stuff. And if you think 2 years is too much time, you're not ready to trade ICT stuff. You got to understand it. See how it's closing? It's starting to work through that inversion now. Do we change bullish to bearish? Right there. That's my bullish bearish change. If we trade below that, your stop loss was down here. You better, aren't you glad you paid yourself at that array? You're getting squeezed now. This closes here in 29 seconds. You're into rejection. Your stop loss is getting squeezed. Pull your fib tool, work your fib tool. Hopefully you got that. If we just worked our fib tool in there alone, that's another method for trading this, by the way. There's many ways of doing this. So let's say you got in here right at 50%, which is in your entry, and you're going 62, 79, all the way up to 79% retracement. You're out. Small range, but again, a smaller range still does the same thing. The algorithms are reaching for premiums to go discount. You're going to hear it over and over and over again. Get sick and tired of it. Okay, now, if you have your stop loss here, your fail safe is right there. So stop loss, you slam it right up against here now. Because if it fails against you, you don't want it to come. Now you want it to come back up into here and get you out. If it comes back and taps, you're open again, close out there. That's what you got to save for yourself. Fail safe because your exit is now getting taken. That's how the fail safe works. You saved a little bit there, but you should have paid yourself on the way up, moved your stop loss up accordingly, and you wouldn't have lost anything on there, even that small little reversal back to this reversal. See what I mean? This is just a smaller version of a larger version that you may see in higher time frame candles. You understand this, you're going to understand a lot of the markets. That's 15-minute bullish. As Michael says, at the new highs, remain bullish until proven otherwise. Not in the biz to picking tops or bottoms. Absolutely. Which completely contradicts my bearish ideas from earlier. Daily candle has been green all day. See, that's the problem, Lambo. Sometimes you can marry an idea and just keep getting your ass handed to you, and you go, why am I marrying this idea when the charts are clearly showing me that it's going higher? Because now we're going lower. Until proven otherwise. Until we get a swing point. So where's my linchpin now? You guys tell me what the candle is. Where's the linchpin for higher, going bullish? Tell me the candle. The time. Just put your candle, tell me the time, and just write the time on the side there and tell me where you see it based on what we've been going over today. Which completely contradicts. Okay. BTC, please. Oh, Bitcoin. Yeah, I'll be there in a second. I just want to finish up some of these notes. Note to self, don't fight the higher time frame bias. No. What do you recommend to best understand your strategy? Kenneth, go to ICT and study his core content. Study all of his core content. It's months of core content. If you haven't got months, don't waste your time. If you're studying other stuff, drop it. Trust me, drop it. Study ICT stuff. You'll understand the market better than anybody out there. You'll understand price action, and you come here and we'll practice it with you. You come here and I'll show it to you. And you'll understand why I say bullish candle, bearish candle, inversion, fair value gaps, mitigation blocks. You'll understand all that terminology because you've studied it. And you're going to get a ton of content. So much. And then you're going to come in here and we're going to make it clean, candle to candle entry. Expectations of where it's going. Every candle has a story to tell you if you look carefully. So yeah, study ICT stuff. Don't pay for it by anybody. Whoever's trying to sell you this stuff, they're idiots. Don't do it. I'm not selling you anything. Just go to the horse. Get it right from the horse's mouth. Gotta love the lunchtime macro. Going sideways. John, your videos are from 9 months ago. Kenneth Bohr the Third. I like that. Kenneth Bohr the Third. Sounds very regal, Kenneth. Are you from England? Tell me you're from England. Tell me you're a fellow Brit. You, me, and Terry are going to have to meet up one day. Tell me you're from England, Kenneth Bohr the Third. And tell me you live on a huge plantation. And you have butlers. Very regal. Familiarize yourself with ICT material. In-depth, best way to understand what Darren is doing. Fully support Derek's idea of what ICT material is. I agree. Jonathan, ICT points. John, I'm not selling anything, but it was made to help with direction and entries. Okay, interesting. Now, if those direction and entries give you some bias to use your ICT stuff, it hones your stuff better, John. By all means, let me know. I'd like to be able to interview you on a weekend and show us your setup, show us your thing, and see how we can tie it in. If I can help you find a way to tie that in with what we know about ICT stuff, and it makes your algo that much tighter and better for you to understand. Somebody else might want to use it. They may not want to use it. I'm all for it if we can help out plugging in ICT. It's like, I look at ICT like you got yourself a car and you want to put a high performance engine in it. You want to put a Ferrari engine in it, or you want to put one of those F1 engines. ICT to me is F1 engine. You plug it into any method that you're using. If it enhances your method, great. If you can run the engine on its own, we're showing you can run it on your own. You don't need all those indicators. But if you do have indicators and you love them and you're really committed to them, then let's find a way to help you make those better. I'm all for supporting you in any way that helps. Staying in longer. This is the ITC. Fernando, this is the ICT church. Don't know why I got my short. Don't know why I just got my short. You took a short in down here? Oof. You're buying at an extreme discount. You better hope that keeps coming down, my friend. You haven't got your stop taken yet? Let's help invest out here. How do we keep him in the loop? You don't want to break above here. If your stop loss is sitting up here, put your fail safe in here. If you have a fail safe, mine would be sitting right in here. So watch. You don't want to see it break up above that. You're in a discount array. It can quite easily come back up into this breaker here before running back down, and you see the next price leg down. So you still might get your short invest, but we've got a breaker and a breaker overlap. This down close candle runs above these highs. This one runs below this lows. So they're overlapping one another. So we should get some strength in here to roll over and come back down. That's my hope for you anyway. If we break above that, we get through this mean threshold, we're looking for higher prices. So yeah, I don't know how many times I've done that. Invest. You're not alone, buddy. I've bought right here. I've even bought right on the freaking low, and it just turns around and goes back up, and you go, I want to go short. I got beat up many a time. So equal lows. I'll even put the carrot down here to try and motivate it for you. Come on. We want to keep investing this trade here. $698.75. 698.75. That's where you got in? 69875? Oh, good. You should be collecting some money back here then, because you're getting a squeeze. That's that fail safe there. So your 69875, I'd move that to break even. I'm not telling you what to do, but I'm just trying to play it in my own head. I'd be moving to break even, pay myself down here, and wait for this. If you break that to the upside, we've got a swing point. Now you're looking for a run back up above these highs into a premium array up here, and that rejection block above you, because you're coming back into this range again. And that range is split by this retracement. Watch right here. Russell says, John, is your algorithm free, or are you selling it? Jack Sims, Michael. You just like saying the name Michael? Michael. Okay, thanks. Yeah, I just type in ICT into the YouTube and you'll find them. Yeah, you don't want to see that. See how it closed up now? Now you want to go for a long, you go in at that point, or if you really want to play it tight, you go in right here, and you're aiming for here and here and here and here and here. All those arrays above you. So look right here. There's the first one. Don't actually take these trades, you guys. I'm just trying. You just study price action. There's one. Here's another one. And if it trades below this, you reverse and go short again. This is where you get consolidations and you get banging around. If you trade on the other side of this with a close and you come back into it because your stop loss is sitting down here, if that trade below comes back into it, get out at break even. That one will take a loss. So here now you're looking for this to run up into here and here and here, run up a little higher. So there's your first entry. Michael, okay, thanks. Invest. What does it matter when it was uploaded? It's still running the same as now. You won't find anything better for gold. Let's see the algo. Kenneth from Florida. Oh, you're from Florida, Kenneth. Well, welcome, my Floridian friend, Kenneth. And who was the other guy who just joined us over here? I think that was Roberto. Somebody just joined us today, said, I love this. You're welcome. I'm glad you're here, man. Let's see, this algo from Florida. You just saw it. I'm still working on it, finishing it, dialing in NQ, but I think I'm ready. I'm really close. Excellent. John, I hope you develop an algorithm that just makes you billions of dollars and you can do all these wonderful things with it. Feed people. Change the world, man. ICT content is pure magic. Fernando, you're absolutely correct, my friend. Invest out of my short. Okay. Yeah, I'd be out of your short too. Looking for a long right now. Here's the bottom half of it right here. See how we've hit the bottom perfectly? The fact that it broke that high, I'd be like, slam, right up against break even now. If it comes back against me, I don't care. I'm out of the trade. I'd slam that sucker right up against break even. So I don't take a loss. And I'm just in a trade now for the sake of going, yeah, does it work? Is it a fun one? Did it work? If not, oh well. I'll move to the side, wait for the next one, because it will happen. And when it does, you're going to catch a nice rabbit, tiger by the tail there. Or you could just do that whole wait and see, leave your stop loss down here, and if it trades below you, comes back to you, then you can get out. Basically, we're looking at this breaker right here. We're bouncing off the mean threshold of this breaker. Remember, breaker senior candle provides a level of support. You're trying to get in above that. You're trying to hop in here and slam through it. And you're right in the middle of a range. So 50%, can it just roll over here and come back down? Is it a really solid entry? Yeah. So for me, I'd be out. They would have broke me even. You want to really see that pump up there now, because see how it keeps closing on that low. Pay for your trade. Get out now. Oops, I got rid of the carrot. Stoic Jack's going to be like, you can't lose the carrot. Do not deny the carrot. It's a pure magic out of my short. Next, 75% my short off and the runner in break even now. Good for you. One good trade. If you want to see one good trade, taking his trades, he's got a website where he takes his trades every day and then he'll post them. So if you go on our channel on the Telegram, you'll see him. He'll post it on there if you want to kind of watch all the trades that he took today. And you'll get an idea of how good he's doing really well as well. And I'm into promoting him if he's doing ICT stuff. So you'll see him post his stuff inside there, and you get to watch how he puts his entries in and stuff. John, I'd love to have ICT incorporated after signals. Yeah. Yeah, if you have an algorithm that you want to tune to ICT stuff, you're more than welcome to get input. I'm willing to help you out there if you want it. Roberto, yes. Roberto, yes, I'm from California. Roberto. We got Florida. We got SCF has joined the group. Welcome, SCF. Whoever SCF is, thank you for joining the Telegram group. Yes, I'm from Europe. Maurice from Europe. Invest. It's rejecting the VRVP right now. What's a VRVP? Very reasonable, very price-oriented What is VRVP? Sorry. What is that? Verv. See? Swings, these little swings. Fair value gap. Body trades below it right here. Pop back up into it right there with precision. Now you're running down into reversal up, reversal down. We broke a body, broke below it. We also have this reversal inside here with these little swings. So you're looking for rejection block. You're really stuck inside this range now. You've even got a reversal going higher and a reversal going lower, all inside a tiny little range like this. And there's your first rejection block. There you go. So there's, see how it quickly reversed? If you didn't catch it right there, then you missed the opportunity for here. But just so you can see, we're going long, we're going short. We're going long, we're going short again now. Right from there. So you see the algorithm will switch up on you all the time. It's not going to throw you off the horse if you see where it does it. Right there. And that's where the algorithm changes and pops in. Coming back here. Inversion. Visual right volume profile. Visual range volume profile. Holy smokes. That's got to be one of those technical things you learn in some, I don't even know how to you'd even find that. VR visual range volume profile. I wouldn't even know how to get in there and watch that. Shows where most volume is on the chart you're looking at. Oh, okay, so you're a volume trader. Okay, yeah, some people use volumes. They use those delta wave or delta patterns. That's just more noise for me. I just can't understand those. But if this helps you hone those better, I'm all for it. I can't use them. See how it dashed for the carrot because it thought I was going to take it away. Quickly ran to get a nibble. We've run the lows. We have a break in market structure now to the downside. We are bearish. And that showed us right there. See the bearishness? And then slammo. Then it started to go. So now you look for a breaker, a mitigation block, something you can key off of here, a 2022 model to go short. I'm short for the rest of the day, I think. Though we could have a run up here at 1 o'clock, take this high out, and then start coming back down. Ooh. All right, I think it's almost done time for me. Europe, OTE, optimum trade entry, yes. My take profit got hit. Yeah, invest. That away, that a boy. You got your money back from the short. Interesting how the NQ just ran to the equilibrium of the 5-minute current range and now is retracing. Ran into the 5-minute fair value gap. Right in here. Yeah. Back to a 5-minute breaker. That's a 5-minute breaker. Right on top. Back into, there's a little tiny fair value gap here on the 5-minute. Right down to there. So mitigation. Breaker. Inside the breaker. Mean threshold. Bodies. I want to see a reaction off of here and start coming back down. I'll leave this open. Start coming down, create a new price leg. To take a trade, you need the setup and the trigger. You need the setup, you need the trigger, you need the stop loss, the fail safe. You have to have the dynamic fail safe. For me, I have to have a dynamic fail safe to follow the trade in case it fails. And I need to have specific PDRAs I'm aiming for. And I've got to be willing to pay myself on the way down and not leave it all in and try to run for the full gambit just because they set up all the time. This happens all the time. So pay yourself all the time. Pay the trader. It's better to walk out of the trade day with a pocket full of nickels and dimes and quarters and dollars than to go back to the bank and look for more cash to put back in the market tomorrow. That's my belief anyway. Looks good to short. 683 looks good to short. 683 from here. You want to keep this. You don't want to lose this to the upside now. If we lose this to the upside, now we could have a real big run up. Because we have a swing below low. This becomes important. You do not want to see that get taken with a bold candle and then come back to it. If it does, get your shorts off and get your shorts off and put your shorts back and put your long johns on. Take your shorts off and put your long johns on and go long. How many cons do you usually go? How many cons do you usually go in with? Oh, contracts you go in with. If you're not being nosy. No. I don't mind. If you're slowly gonna work your trade, slowly work your account up, just use one. I use one unless I'm super solid on the entry, then I'll load in more. But usually just start with one and just nibble your way up. Like Michael says, all you need is a mini that gets you 200 and what was it, Derek? Was it 320 ticks a day or 320 ticks a week? Was it? I think it's a week. And see where it gets you by Christmas. And that's, I think, 320 ticks is like 80 handles. And that's with a micro. So if you put one full contract on, and that's all you trade is one contract with the fail-safe that always protects 1%. If 1% of the best way to say it is do 1%. Don't go by contracts, go by 1%. Unless you can't put on a minimum, but one lot. This won't let me put partial contracts on. It only lets me put on full lots. Or full contract. Full lots is the 4X version. So that's what you want to see, continuation on the downside now. Good, next price leg down. So watch your price leg here now. Right to Senior Carrot. And look at that. It lines up with what? Over here. Fair value gap. Right there. Next price leg down, so you just go mark like that. That would be the objective I'd be aiming for in the short little time. So yeah, just do 1% of your account and practice and demo. And then when you see it in your live accounts, 1%. Follow the rules. Follow the freaking rules. You will get your butt handed to you if you do not follow the rules. And those rules have to be your own, obviously. You can use mine, but I don't want to turn you into a bunch of Darren traders. I just want you to be able to see price action clear so that your entries, whatever methods you use to trade with, if it helps you hone those skills a little bit better, then I'm happy for you. Then I've done my job. I think I'm going to wrap it up here. To take a trade, you need to don't be nosy. This stream has become steamy, where the streamer begins to tell the participants to get their shorts off. Get your shorts off. Yep, 320 ticks is 80 handles. All right, that's it for me, folks. I'm going to cash it in today. Going to spend some time with my father-in-law. He's here. So I will see you guys on the Telegram channel in the off hours. I'm still loving what's going on in Bitcoin right now. There's been some awesome entries in Bitcoin. I have to show you this before I go. Dang nabbit. Look at this. Reprice, rebalance. We trade above it. You go, oh, I don't get a chance to get on. Oh, yes, you do. Slammo. And off to the races you go. Oh, look at this. We have another entry. Now this is running through both of those. So this will be interesting to watch this. I'm going to end it here, but I want you to watch here. Because we've run one candle, runs all the way through all of these. So if it returns to this and then keeps going, that's the thing I'm working on for these double fair value gap idea. We have a triple there as well. It might even be here. So anyway, just kind of keep that in mind, because this swing high has just got blasted. This short that we didn't break out an old low anyway. Oh yeah, you did right there. That one got eaten right through. So if your stop loss was here, it just got pounded. So watch this. Do we get back into here and then go short again? Or does it come all the way back up into here? Again, 1% from there to there. Small trade, small leverage. Be interesting to see what happens there. Anyway, keep your eye on that. Look for lower prices. Look for a break in trend line phantom people who are into a trend line here. This could be the trend line phantom break, and then look for right here off this candle. Right there at 66,357. Look right there. Anyway, that's it for me. Thank you very much, everybody. I really appreciate you guys coming and hanging out with me every day. It's awesome. I love meeting all you new people. If you want to tell me your story, DM me on TradingView or on Telegram there. I've had a couple of people tell me their stories, and it's just fascinating to hear the life that people have had and the life they want to make for themselves and their family and their friends, and how they want to make an impact. So I'm always interested to hear how the markets are helping you, or what it is you hope to get from them, and let's help get you there. Let's help your dream come true, man. Let's see if we can't make that happen for you. But until tomorrow, my friends, on a Friday, I will see you guys live in the morning at 9 o'clock sharp. Thank you so much. My name's Darren, and I'm working to be a ThetaWaveTrader. Remember, ThetaWaveTrader is not a person. It's a mindset. Become ThetaWaveTraders, my friend. Even you, Roberto and Fernando. See you guys later, man. Take care.